stronger in certain groups of people versus another. And, the more spread of that type of, risk that you have about how you make these, does the science work, so on and so forth, the better. So you have companies like J&J, Novavax, Sanofi GSK, Merck a little bit further back, all doing this work. Being first does not mean being only. And given that this could be a seasonal disease or one we live with for a while, there are going to be the picture a year from now on which vaccines we're using may look very different than the picture a month from now.
Drew, great to catch up, sir. As always, enjoy Thanksgiving, sir. Drew Armstrong there from Bloomberg News. Thank you. Some headlines dropping across the Bloomberg then in the last 5 minutes. Let's wrap them up quickly. The Chancellor saying the budget forecast will be £394 billion, the deficit in 2020-21. Important to point out, Tom, that the numbers, these projections around things like growth, unemployment, they're made by the Office of Budget Responsibility. They are independent of the government. So this is not the Chancellor saying this is where I think it will be. This is the Office of Budget Responsibility saying this is where we think the numbers will be. And he tries to build his spending plans around those projections, Tom.
Is that stimulus? I mean, this is like what we're not doing here, right?
No, that is not stimulus. That's the outlook based on the fact that tax income, Tom, has fallen so much and spending, of course, has had to rise, that will be the gap. That's basically them just projecting the gap between income and spending going into next year. The one to watch in the next couple of minutes is the aid budget, the international aid budget coming out of the UK. Right. Just keep an eye on those headlines if you can. So from London and New York this morning, good morning. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements we can actually have the superb measurements that we expect of sea level rise, but also the waves, the significant wave height, which is the top 1/3 of the waves if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Nightmare scenario for markets would be if the unemployment rate in November will begin to go higher.
Even before the pandemic, we had a lot of frailties.
I think we will have weathered the storm, and I do hope that the worst will be over by next summer.
The back end of 2021 could be a little bit more precarious.
We may experience a bit of a dip economically.
We're still in a deep recession.
It isn't as much a risk of a double dip. It's a risk that we extend the rebound.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Dow 30,000. Where were you March 10th of 2009? Well, you're up 16% per year on the Dow. SPX, actually, I believe better as well. John, there have been 47 reasons along the way to go to cash. And yet here we are with solid double-digit returns across 13 years.
And some houses got it right. One of those houses, Morgan Stanley. It was really uncomfortable to make the call coming out of March, Tom, to remain committed to the recovery in the US economy. It took some real confidence. And one thing that's frustrated me over the last couple of months is every time someone comes on this show and says the easy money has been made.
Yeah.
There was nothing easy about going long in early April during lockdown. Let's be clear about that.
Well, not only going long, and our guest is going to get to that. We're going to keep this short today to get every second we can with Mr. Wilson of Morgan Stanley. But John, you step back here, and as you say, a leap up in energy, a leap up in banks. That's great. But John, we're really not even back to the trend, the reversion, the mean of those series, are we?
Not yet. Well, let's look at the bonus pool coming out of Bank of America. We're just breaking the story now that Bank of America proposes holding the bonus pool flat for traders. Tom, this on a year where in the first 9 months of this year for Bank of America, revenue's up 20%. And I think some people were hopeful going into bonus season that maybe they'd get a boost around that. But we're reporting right now Bank of America proposing holding the bonus pool flat for traders. That headline just crossing a Bloomberg, Tom.
Oh, you see it right now. We got to get to Mike Wilson here in a bit because he's going to be on the phone to Bank of America. Folks, this is what happens here. And Lisa, this goes back to what UBS wants to do in Switzerland, where they're trying to rejigger away from bonus compensation. My experience is that works until it doesn't work.
Well, and the key tension here is how much will it be difficult to recruit people as a result of this, or how much will the entire Wall Street employee base shrink next year, making it possible for Bank of America and others to move to a leaner model, especially as they expect loan losses ahead. And this also goes to this underlying tension of that enthusiasm in markets paired with an economy that isn't going gangbusters. And this is why it has been so difficult to get this call right, Tom.
John, this goes to compensation and it goes to resetting here, with whether it's hedge funds, alternative investment, institutional managers that are behind. John, imagine the panic out there right now to get to a shape-up of your portfolio 12/31/20.
Well, I think some policymakers are panicking too. I just want to bring you this headline because I mentioned it 10 minutes ago, Tom. It comes from Chancellor Sunak. The UK will cut the overseas aid budget to 0.5% of national income. I believe that was previously 0.7%. The budget pool last year for international aid, I think, was about 15 billion sterling. So that's getting cut, Tom, which will be somewhat controversial when it comes to the UK's standing in the international order. So cutting the overseas aid budget, that is very controversial right now within the United Kingdom and within the Conservative Party as well. We can move on and talk about markets, but just a headline that's crossed the Bloomberg once again, this time from Chancellor Sunak.
Well, very important here in the flow here. This is into the year end, into the holiday season. And in this hour, in 26 minutes, you're going to get the mother of all annual data dumps. Michael McKee will join us there on the economy. And, of course, Ellen Zentner at Morgan Stanley really looking, I believe her phrase was, a winter of discontent. Her colleague, Michael Wilson, joins us right now. Mike Wilson, U.S. equity strategist at Morgan Stanley. Do you share your colleague's discontent? This about the equity markets.
Well, good morning, Tom. Good morning, all. The discontent in the economy may not necessarily mean discontent in the markets. I mean, as you know, markets trade differently from the economy. And look, we are looking at a slowdown for sure as the case counts rise, potential lockdowns, and all that good stuff. Look, while the S&P 500 is basically flat since early September, there's a raging bull market going on under the surface. This is the point we've been really trying to emphasize, that as we look forward to next year, there's still a lot of undervalued assets within the equity market that hadn't participated yet, and that's the big story that's really going on in the equity market.
Is it absolute or relative? Do you unload your tech to go over to materials, cyclicals, banks, and the rest, or do they participate as well?
Well, we did that. I mean, that was the strategy. I mean, you guys were talking about stepping into the fray back in March being difficult. I think it was even more difficult to kind of move away from the former leaders to the laggards, right? That's a real career risk for a lot of people, and I think folks have fought that as long as they can. And now it's becoming apparent that they need to consider that move. And that's what the last 3 weeks is really all about. The combination of an election result plus the vaccine news is now forcing people to consider the possibility that this leadership change is not temporary, that it's actually more sustainable, and positions and portfolios are just not ready for that.
Capitulation. We've got two time frames here, Mike. You and I have talked about them so many times, the near term and the medium term as well. You've had this trading range that you've developed, and it's evolved slightly as the year has progressed. Mike, can you walk us through that range right now and why you think we might be in for a test at the lower end of that range?
Yeah, I mean, trying to call corrections in a bull market is sometimes a fool's game, but sometimes it makes sense. So obviously, as you know, we were extremely bullish from March through basically August, and we then thought the market would go through some consolidation, and we threw out this range of 3150 to 3550, which was technically driven. Now, that worked really, really well from basically August through the end of October. We made a trading buy call at the low end of that range right before the election. That worked out really well. And now we're up at the upper end of that band again, actually through it. We're at 36.35. So, we're going to be objective about this. We're not going to get dogmatic about some trading range. But look, at the end of the day, John, at 36.35, you've baked in pretty much as much upside as you can legitimately sort of confirm with fundamentals, okay? The technicals are one thing, but also on a fundamental basis, it's hard for us to stretch it much beyond that. You have liquidity, maybe surging in the market that's taking things higher, but our job is to tell our clients when the risk-reward is attractive. And right now, the risk-reward is much less attractive than it was 3 weeks ago. It doesn't change our view about the bull market extending into next year. And once again, the main message we want to leave with clients is don't focus so much on the index. Let's find the opportunities that are clearly in a bull market. And as you were talking earlier in the show, I mean, the Russell 2000 is up 20% this month, and it's just starting to have relative outperformance. Those are the types of things that we want to focus on for clients.
Some notes that I was reading, research notes after Janet Yellen was nominated to be the next Treasury Secretary, said this would turbocharge the euphoria for a longer period of time because the idea of a Treasury working more closely with the Federal Reserve, willing to run the economy hot, is good for inflation, is only going to fuel the trades that you're talking about, Russell 2000, financials. Do you agree that Janet Yellen at the Treasury is, if not a game changer, at least it really adds momentum to what we're seeing in the market?
Well, absolutely. I mean, one of our themes this year has been that we're moving out of what I would call a monetary policy dominant regime to a fiscal policy dominant regime. And in fact, Janet Yellen and Ben Bernanke as well have been writing op-eds for the last 6 months imploring Congress to do more fiscal. Jay Powell has also signaled that at every press conference. And so the Fed has almost been imploring the government to say, look, we need your help this time. We need to get more fiscal cooperation to use the cheap money to finally pull us out of this sort of low-growth environment. And putting Janet Yellen as U.S. Treasury Secretary can only help that effort, in my view, because it does come down to a negotiation with Congress. And obviously Janet Yellen has tremendous street credibility, and we know who she is. She also has a penchant for some of these programs that are more favorable to the lower income cohort, which is exactly what has been working this year, right? Getting money to the folks who need it and who will spend it.
Mike Wilson, international investment now. Which inning are we in? Is it just beginning, or has it been a nice pop and that's it?
Well, this is another one that, sort of has been a bit of a widowmaker for the last, 6 or 7 years, in the sense that every time it tries to make a move, it just, gives up. It's like the value versus growth phenomenon. It's the same trade, Tom. And I think that we are at an inflection point right now for the more cyclical parts of the market to work better, because there's, economic growth acceleration, not just here, but globally. And some of that is inflationary too. So there's no doubt that those markets, if we're right about our fundamental economic view, then those markets should have better performance over the course of the next 12 months.
Best month ever on a Stock 600 over in Europe this month. Unreal. Up around about 15%. Mike, tremendous work with the team this year. Fantastic to follow some of the research. Have a wonderful Thanksgiving, sir. Mike Wilson there of Morgan Stanley. Tom Keene, so here's the range, 3150 to 3550. We closed where yesterday? North of what? 3,600. And they're looking for a test to the downside. Maybe. Once again, in the near term. And that's been a story over the last couple of weeks, hasn't it? That tug of war between the near term and the forward outlook. The forward outlook overwhelmingly has dominated the trading environment. And I just wonder, how much bad news do we need to really test the tolerance, test the patience of that argument?
Yeah, let me frame that for you, John. The way you do is on the Bloomberg, you look at standard deviation analysis. Grim is 3259. We've got what's called room to move up to 3735, and center tendency is about 3,500. So that's that pullback they're talking about.
Data 20 minutes away, Lisa. Last week, claims were softer, moving the wrong way. Retail sales, downside surprise. And I've just heard about PMIs for much of this week from the United States. And typically, we don't talk about market PMIs in the United States, but it's something that's come up again and again. The data last week, this week, it's been good.
Honestly, what I'm looking for is the personal income and the personal spending. What I think could really shift the markets, based on my conversations with a number of strategists, is if holiday spending comes in much weaker than people expect. That challenges the entire narrative of a resilient consumer and that confidence. And that, to me, could potentially be at least a near-term game changer, at least in the margins.
On this Thanksgiving Eve, alongside Lisa Bravitz and Tom Keene, I'm Jonathan Ferro. Counting you down to the opening bell. The economic data about 20 minutes away. The economic data comes first, then the opening bell comes 60 minutes later. We'll run you all through
then
it.
The real
Record
yields.
Highs,
Friday.
Tuesday at the close. Real yield comes this Friday, midday Eastern time. I'm sure you'll be watching it with your turkey.
Lions.
Sitting at home.
Detroit
Lions. Getting a bit of the bond market.
Watching the shopping channel.
Detroit Lions.
You've
taught
not
me
the
that
Tots,
tradition,
the
Tom.
Detroit Lions.
I watch the Detroit Lions on Thanksgiving. I always do.
My deepest sympathies.
I always do. I do that for Michael Barr. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The number is stunning. In the UK, Chancellor of the Exchequer Rishi Sunak says the British economy will shrink the most in 300 years. Sunak told Parliament that GDP will decline by more than 11% in 2020. The government's budget office projects 5.5% growth next year. President Trump heads today to Pennsylvania in his campaign to overturn election results there. He'll meet with state Republican lawmakers examining accusations of voting impropriety. Pennsylvania has already certified that Joe Biden won the election. Trump supporters complained that observers were not allowed to be close to workers counting votes. U.S. health officials are working on guidance to shorten the 14-day quarantine period if they're exposed to the coronavirus. Officials are starting to see more evidence that suggests people could spend less time in quarantine as long as they test negative for the virus. Shortening those quarantine times could mean more people comply. And IBM is planning to cut about 10,000 jobs in Europe, roughly 20% of its workforce there. It's an attempt to lower costs at its low-growth services unit and prepare the business for a spin-off. Bloomberg's learned the IBM cuts will be centered in the UK and Germany. Cuts also are planned in Poland, Slovakia, Italy and Belgium. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We're already working out, meeting with the COVID team in the White House and how to not only distribute, but get from a vaccine being distributed to be a person able to get vaccinated. So I think we're going to not be so far behind the curve as we thought we might be in the past.
That's the good news. All getting our hands around the idea that we have a vaccine. It's about the rollout of vaccinations. That was President-elect Joe Biden speaking to NBC alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Here's the price action. Record-breaking financial markets worldwide through the month of November. We had some weight to that in yesterday's session, and we pulled back a little bit. We take about 6 points off the S&P 500, down 0.2%. In the FX market, muted price action here on euro-dollar, just south of 119 at 118 and about 94. And in the bond market, basically unchanged there too, Tom, 0.88%. Crude, $45 on WTI.
Yeah, you mentioned American oil. I'd also go to Brent Worldwide Oil, John, 48.27. I'm not on a $50 a barrel watch, but nevertheless, what a move in the last 10 days. Right now, and this comes up on the economic data that we're going to see and what John has talked about happening in the House of Commons right now with a Britain in recession that is a compare and contrast to Queen Anne 300 years ago. Tobias Adrian is one skilled to put perspective on this with the International Monetary Fund and Director of Monetary and Capital Markets. Dr. Adrian, out of the Massachusetts Institute of Technology and, I should say, the New York Federal Reserve. Tobias, I love your essay, which links in the path forward 1 year, 2 year, let's say the path forward out to 2023, and you link it directly in to the financial stability that the Chancellor of the Exchequer desires. Can we have it both? Can we have our turkey and eat it too?
Well, good morning. Thanks for having me. Yes, central banks, including the Bank of England, but also the Federal Reserve and the ECB, have deployed extraordinary measures this year in order to fight this terrible pandemic. And that has been tremendously helpful in easing financial conditions, getting financial markets to work, allowing firms and governments to borrow from markets. So that's a very, very good outcome. But of course, an intended consequence of this monetary policy easing is for risk-taking to return in financial markets. And indeed, we see that high-risk borrowers can get loans. But you have to make sure that there's not excessive risk-taking.
Right. This is really important, folks, and this goes to the Blue Book, the Brown Book, and the Green Book of the International Monetary Fund. Have you guys calculated the percent of GDP that we're going to have to spend on this pandemic? Progressive and liberal economists would say it's a much higher percent of GDP. Do you have a statistic, Tobias?
Well, yes, we have looked at the fiscal expenditures this year, and there were about 12 trillion globally, 12 trillion. So that's, depending on the economies, in advanced economies, it's up to 15% of GDP that has been spent in 2020 alone on fiscal expenditures in order to cushion the economy from this terrible pandemic.
And yet, still people say that monetary policy is doing the heavy lifting, Tobias. So even though you do have that incredible fiscal expansion, still it is the idea of incredibly low interest rates and bond purchases and beyond by central banks. What are the financial stability risks of this disconnect that we keep talking about with markets flying high at records, even as we look at a pretty bleak winter?
So for the moment, things are in pretty good shape. Banks have entered this crisis with much more capital than they entered the 2008 crisis. And of course, markets have come back, and that has been very helpful in terms of sustaining the recovery and sustaining the economy. We worry about the next 3 to 4 years if monetary accommodation is still needed, financial conditions remain easy, that could fuel risk-taking going forward. And so it's really in the medium term that we worry that there could be some degree of excessive risk-taking in some corners of the market.
As you pointed out, though, this was the objective of policy, to divorce financial conditions from underlying fundamentals. You used the word excessive. Can you define the word excessive, and who gets to decide whether it's excessive?
Absolutely. It's a balance. It's a balance. So you do want lending, you do want to support the economy, but you want it to be measured. And so getting the balance right is really what is on the table here. So in our view, supportive monetary policy is going to be appropriate for some time in many countries for many years, but that has to be combined with regulatory measures that make sure that there isn't excessive risk-taking in terms of risky lending or the buildup of leverage.
Are you thinking of the macroprudential tools around the housing markets that we've seen before in, for instance, the UK, those kind of things, Tobias? Is that where your head's at the moment?
Yeah, it would cover, of course, the banks, the non-banks, as well as the household sector and the corporate sector. So you really have to look at the economic system as a whole.
Tobias, come back soon. Love to continue the conversation. Tobias Adrian there, IMF Director for Monetary and Capital Markets. Tom, here's the problem. Right now, if the objective of policy was to divorce financial conditions from the underlying economy, at what point do you decide that we need to recalibrate things once again, that maybe things are too excessive? And if you do, and there is an adverse reaction in markets, and you get a tightening of financial conditions, what do you think the first thing a policymaker does again? Step back in, step out, let it rip?
I think in every nation it's different. You see it in the battle in Europe between Hungary and Poland. But, John, I would just simply, it's almost a moral or philosophical debate over income replacement at this stage. I mean, granted, there's a part of America doing really well. I get that. But there's a huge part, including Bank of America traders, that aren't doing well. I don't mean to make a joke about it, but, there's a huge body of people this Thanksgiving who are not getting by. That is an indisputable fact.
On the fiscal side, yeah, and I believe you're not talking about the Bank of America traders at all.
No.
Lisa, this situation right now is just kind of utterly bizarre. We saw Chairman Powell try to do this in the back end of 2018. Financial conditions tightened. The primary market seized up in high yield. What happened? Chair Powell stepped back in. We saw President Lagarde try this at the ECB earlier in March, saying that we're not here to close spreads. Guess what the ECB's here for now?
To close
spreads. Mohamed Al-Arian wrote about this in the Financial Times earlier this week.
Yeah.
He's right. We should be making an effort to de-emphasize financial markets away from policymaking. But have we already gone too far? I think that's the question we need to ask, because I think maybe we have.
I think that I'm really glad you brought up the Mohamed Al-Arian column. He was talking about how Joe Biden has an opportunity to try to change the narrative, because as President Trump had displayed yesterday at that press conference, he's been very connected to the market and using it as a gauge of economic health, which can be problematic if you see this divorce continuing between the economic health as measured by unemployment rates and other measures versus the markets which are record highs. But I agree with you. How are they going to do that?
Lisa is such a beast on Twitter, Tom. As we're having this conversation, the tweet's already out with the Al-Arian column.
She's like,
I just can't keep up with that. It's just ridiculous.
She's like all
4 minutes away
the whole thing.
It's the
from
Cholula.
some important economic data in the United States of America. The full coverage continues on Bloomberg TV and radio. This is Bloomberg.
it is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
Spare a thought for Michael McKee on this Thanksgiving Eve. In about 10 seconds, 14 data points. Yes, 14 will drop across the Bloomberg terminal simultaneously. Then we'll do the same again in about 90 minutes' time. From New York and London this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. The economic data slowly pouring out. Let's say hello to Mike. Hey, Mike.
Good morning, John. Thanksgiving brings a cornucopia, and today we do have this cornucopia of economic data. Let's talk about the ones that you'll trade on. Watch the bottom of the screen here for all the data that we might not get to. Initial jobless claims, of course, the one everybody wants to see, and it's bad news again today. 778,000 new claims. That's up from 742,000. Now, I don't have the revision yet on the prior week's number, but it was 742,000. Continuing claims continue to fall, 6,071,000. However, remember that means people are moving from the regular jobless claims benefits to the extended benefits. The wholesale trade balance, the advanced goods trade balance, the advanced trade report, an $80 billion, $80.3 billion trade deficit in the month of October. That is just slightly lower than the $80.4 billion that had been forecast, $79 billion last quarter. So another drag on the third quarter growth numbers, or this will be on the fourth quarter growth numbers because we got into October. We're just getting the durable goods numbers down now. That's one that people are going to be watching closely. Durable goods orders overall up 1.3%. That's more than the 0.8 forecast and not quite as much as 1.9% in September. Capital goods orders, non-defense ex-air, this is the part that goes into GDP that economists like to look at. It's up 0.7%, 0.7%, down from 1% last month, but up above the 0.5% forecast number. So durable goods come in better than expected. Jobless claims come in worse than expected. Pretty much what we have seen in terms of the narrative that the labor market is deteriorating, but factories and production hanging in because inventories had been so low. We do have wholesale and retail inventories out. Wholesale inventories up 0.9, retail inventories up 0.8. So some of that factory work is going into warehouses.
Mike, folks, I can't convey enough how difficult this is for Mr. McKee now versus when we used to all get the data dump up front. Boom, it was there, and McKee could massage it. Mike, what I find so important here is I got a 33% statistic on GDP looking back long ago to the summer months when Farrow was out hiking in Switzerland or whatever he was, taking 6 weeks off. Michael McKee, how far are we from the boom of that 33% bounce?
We've come a long way down, Tom, at this point. I mean, I didn't mention GDP. This is the first revision of it. It comes in at 33.1%, exactly the same as the prior quarter, so no real changes there. The point is the economy was bouncing back there. That was just a bounce, and now we're in the question of whether or not we're expanding again. The latest data, we don't incorporate today's numbers in it, but from the Atlanta Fed, GDP now is about a 5% increase in GDP so far for the fourth quarter, but that'll come down. We're expecting something in the 3% range overall by the end of the quarter. And of course, you got people like JP Morgan saying we're going to have a contraction in the first quarter.
Mike, I want to go back to one data point. This is a flood of information. One of them stands out to me, and that is the initial jobless claims, which comes out substantially higher than people had expected. It was revised upward last week. The headline here is that more people are filing for jobless support at this point than last week. This is not what you want to be seeing, especially because we're supposedly in a recovery. Can you give a sense of why this matters, why this data point is potentially the most important among a slew of information today?
Well, consumption is 2/3 of the economy, and if you don't have a job and you don't have a paycheck, you're not going to be buying a whole lot, and that's what people are concerned about right now. On a longer-term basis, and this will be an issue for Janet Yellen as Treasury Secretary, how do you get those people back to work if their companies are closing? And the kind of stories you see now, Lisa, are about companies that had barely made it through to this point. And now with COVID cases accelerating everywhere, a lot of those places are just not going to be able to reopen. They're going to run out of their ability to stay open, and particularly without any kind of stimulus, extra money coming in, a lot of people are going to be off work for a long time. And the thing everybody's watching is the growth in long-term unemployment, which has been very large recently.
This is the test for this market. We've had 2 weeks of this now, of jobless claims going the wrong way. Tom Keene, the test that's set to continue as well. Many people think going into year-end, possibly into Q1, Mr. Ferroli over at JP Morgan looking for some weakness at the start of 2021 as well, saying that the economic data is set to deteriorate even further in the face of a record high market and the euphoria about the forward outlook. Let's get to the price action in a moment. Really muted price action off the back of that disappointing move in initial jobless claims. Futures unchanged on the S&P 500. Got a bond market with the smallest of bids down not even a basis point on a 10-year, and an FX market well behaved. Tom, we're going to see more of these tests. Will it test the tolerance of the confidence, dare I say euphoria, that many people have about the year to come?
Well, we're going to see it, but yeah, I totally agree about the testing of it in the two-part economy that we have, the labor market, and some of the good news, actually, that Michael McKee gave us there. Michael McKee, thank you so much, and, of course, much more at 10. Look for that across Bloomberg Television and Bloomberg Radio this morning. Catherine Mann joins now from Citigroup. Dr. Mann, on a Thanksgiving, we're supposed to take a bigger, broader view with you. Somebody mentioned there another major bank looking for zero, looking for slowdown, looking for recession. Can you be so grim as to tell us we're going to begin to approach an NBER recession?
Well, of course, the NBER recession is the two consecutive quarters of negative growth. That's the official word. I don't think we're going to be looking at that. That doesn't imply that we aren't going to be looking at a very difficult situation for a lot of people in the market. I think that you have said that you have this two-stage recovery. One is manufacturing doing quite well. Having a trade deficit in durable goods or capital goods is actually a good sign for business investment going forward. But of course, the labor market, the continued weakness of the labor market is something that is going to drag the whole economy down. So, you've got two speeds. One is extremely slow, actually in reverse. I mean, that's what the initial claims is telling us. That's in reverse. The capital goods trade deficit is actually positive. But that's going to keep us from being in, official recession. But it's going to be very grim. I think we can't.
Catherine, can you give us the near-term, medium-term outlook then at Citi for you guys right now? Just your base case in terms of the outlook, the contrast between the two.
Well, as I say, I've sort of outlined the fact that the continuing claims and the initial claims are pointing to a very difficult period of time over the next few months, possibly into the second quarter of next year. Our official forecast is that the U.S. economy will have returned to the pre-COVID level of GDP in Q2 of next year. But I think that has to be considered in light of this burgeoning caseload in around the country. That's clearly going to weigh on that forecast.
Catherine, we keep talking about how markets are ignoring the near term, looking to a brighter period of time with a vaccine and traveling and more jobs. And the question that we keep coming back to on surveillance every morning is, what is the damage, the longer term damage being done by the virus that is spreading at an exponential rate? And we're seeing that that's affecting the employment picture dramatically with worse than expected jobless claims coming in. What is the scarring? How do you measure that?
Well, there are different ways of measuring it in the labor market data, but the different U's and so forth. But I really think that it's the labor market. It is the small businesses that are disappearing, and it will take time to bring that back. But I also think that there are some other potential changes in the way the economy works that is a consequence of this divergence between what's happening to companies sort of in terms of the real side and what's happening to companies in terms of the financial side. So one of the things that we are seeing is that the companies that are flush and have done well are buying their competitors. So that, M&A. So we've seen more M&A. We're looking at more of that coming forward over the next 6 months anyway. And so when we come out the other side, the structure of the economy looks very different, or potentially quite different, with more concentration. That, of course, is not good for labor market, people in the labor market being able to get their wages and that sort of thing once they get employed. And so consolidation is great for markets. It's great for stock prices, but it is really bad for both innovation and for workers. So longer term, the type of M&A concentration that we might end up with 6 months from now is not something that we're happy about in the longer term.
Catherine Mann, a fancy question here on foreign exchange and your excellence in international economics. What happens is you end up having dollar dynamics which harm countries, they complain, and you get an abrupt reversal as well. With a weak dollar, I guess their currencies get stronger. We had one house today go to a yen 95, which is a shockingly strong yen. Is that what's in store for us next year? Our strong currencies where other nations scream at President Biden?
I think that there's a general view in the market that dollar depreciation is sort of in the cards. Baked in almost. But I think we have to look at a lot of variation in how economies are going to be performing over the next year. We do see a lot of differences in potential improvement in the economies over the course of the year based on policy differences, based on vaccine acceptance differences. So I think it's premature to say that we're looking at a Plaza Louvre situation where the dollar gets too weak and then everybody has to go in and try to reverse course. I think there's a lot more choppy waters. I think it depends on whether you're looking at Latin America or looking at Asia in terms of emerging markets, and even differences between Europe and Japan against the dollar. I think we've got a lot of different factors at play.
Getting some reaction to the data dump of the last 11 minutes. Kathy Jones, a good friend of this program, of Charles Schwab, weighing in, saying jobless claims up to 778, not a good sign, but durable goods orders rise more than expected. Same old story, manufacturing good, but job market not so good. And Catherine, you touched on this a little bit earlier. Your thoughts on how long that kind of dynamic can persist? These two different economies that seem to be persisting at the moment, at least, not just in the United States, but in Europe too.
Well, manufacturing is really being supported by both the policies that were put into place to replace worker incomes at a time when they couldn't spend it on anything else. So that's why we're seeing manufactured goods looking so good, retail sales looking so good, were looking so good in terms of the bounce off the bottom. And then the furloughing schemes in Europe. These are all sort of designed to replace worker incomes, but of course they have limited things to spend it on, and retail sales is one of the ways they're spending it, durable goods. So there's that. Then, of course, there's the replacing the inventories associated with the lockdown periods. Both of those, at least in the United States, are coming to an end, especially the support programs designed to support people's income, without any kind of move towards either a replacement of those incomes or move towards another strategy of spending tax changes and regulatory changes that are going to promote business investment, to promote employment. Then we do have this situation where ultimately the lack of consumption, as Michael McKee mentioned earlier, the lack of consumption is going to drag down the business side as well. So you can't go out too far on the limb with manufacturing doing well and employment doing poorly. Ultimately, you fall off.
Catherine, always wonderful to get your perspective. Catherine Mann there of Citigroup, thank you. So about 13 minutes ago, we had a ton of economic data drop across the United States of America, 14 data points, everything from capital goods, durable goods, continuing claims, initial jobless claims as well. On initial jobless claims then, 778, the wrong kind of upside surprise, a second week of it. You plug all that data into financial markets and it looks a little something like this. Euro-dollar breaks out through 119, bit of dollar weakness into the mix, against the euro at least, 119.07. The smallest of bids into the bond market, a 10-year yield down by about a basis point now, Tom, to 0.87%, and futures unmoved. Claims going the wrong way. Durable goods orders doing okay. The story here, Tom, is just a drip feed of negative data around the jobs market going into year end.
Yeah, I'm going to go to David Rosenberg, who's just wonderful on slicing and dicing this. And John, it's real simple. There's goods inflation, service inflation. With a vengeance, service sector inflation has come in, disinflation since March. And you really wonder, do we reverse back to that 3% plus service inflation or not? To me, that's the raging debate that links right into policy and then right into yield and then on to markets and equities as well.
A debate into 2021. Guys, I'm going to step away. I'll let you close out the
You got to go
program.
influence.
Got to get set for Bob Michael. Bob Michael at JP Morgan's going to join me on the other side, so looking forward to that.
You're going to be
and I know you're going to talk about getting back into first class on a plane soon with Brian Kelly, the points guy.
He's an influencer out on Instagram.
Very cool. I'll join you on FaceTime tomorrow, Tom, with a little bit of pumpkin pie. How about that? And we'll link Lisa into the mix as well. Should we do it over Zoom just for kicks?
Oh, we should.
Make it feel real 2020.
We could. Vet Bill will set it up.
I'm brightening my iPhone.
We'll do it for social. I'll bring some makeup along. We'll push that out on Insta.
It'll
make a day of it, guys.
Yeah.
Sounds brilliant.
Whole day.
Do a team talk tick.
With the First Word News, I'm Rishika Gupta. This could be an omen for Wall Street. Bloomberg's learned that Bank of America's leaders are planning bonuses that break with traders' hopes for big raises after a record-setting run. Senior executives are floating plans to keep the bonus pool for sales and trading at last year's level. That's despite a 20% jump in revenue in the first 9 months. Joe Biden's made it clear he wants to calm international relations after what's been a tumultuous 4 years. The president-elect introduced a team of foreign policy experts he plans to nominate. The appointees will work with Biden on his goal of restoring U.S. ties with international organizations that President Trump has spurned. Meanwhile, Biden is encouraged after just a day of transition talks on the coronavirus with the Trump administration. He spoke with NBC News.
We're already working out, meeting with the COVID team in the White House and how to not only distribute, but get from a vaccine being distributed to a person able to get vaccinated. So I think we're going to not be so far behind the curve as we thought we might be in the past.
Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Of course it's going to help. Let's assume that they have a rapid testing system that has the efficacy and the reliability that they should have to do that. That should deal with a lot of the concerns that some countries have, but not all.
Good morning, everyone. Bloomberg Surveillance, and we say good morning to you here this Wednesday before Thanksgiving, a time normally of immense travel. I call it the fourth Wednesday of November. It's just simple. The college kids come home. There's all the things we've done over the years, and then there's a pandemic. It has hit no one harder than the hospitality industry, and particularly how we transport in our business and hospitality, and that would be travel. So it'd be good not to speak to a CEO talking their book, and boy, we've done a great job on that. Thank you, Guy Johnson, for leading that coverage worldwide. But how about talking to somebody who single-handedly changed how we travel? His name is Brian Kelly. He's never gotten the credit from the straight business community about what the Points Guy has done. It was a website. It was a joke. Everybody laughed at him until they realized JP Morgan was listening and Mr. Diamond was taking notes when Brian Kelly opened his mouth. Brian, you were unprepared for this. What are your thoughts into 2021?
Well, Tom, just first off, thanks for giving me that intro instead of just saying I'm an influencer.
An influencer, yeah, big deal.
That's next.
I'm kidding. No, this year has been absolutely wild for consumers traveling. But I do see hope on the horizon. Just in talking to our millions of readers and looking on social media, I do feel this bubble of revenge travel that's going to come up, I think, in 2021. So I do see good things on the horizon.
When we look at things like Qantas setting up rules, do you feel your world will be the rule makers that force 100% use of vaccination?
I travel to Ghana quite a bit, and I have to show my yellow fever vaccination. So, yeah, I wouldn't be surprised if countries, this virus, it's crazy how quickly it can spread. Once you think you get it under control, all it takes is a couple quick mistakes, and it can spread like wildfire. So, yeah, I do see more countries putting in a virus passport, once these billions of doses are out there and we can actually track who got it.
Brian, I hope that I can join the wave of revenge travel. I think a lot of people are looking forward to getting back on planes and seeing the world. I am wondering, though, if it's going to be more expensive. The hospitality industry, as Tom was saying, has gotten hit very hard. How willing do you think, based anecdotally on what you've seen so far, will they be to continue some of these points and loyalty programs when they need cash? They need the money.
Well, it's funny because these points and loyalty programs bring in billions of dollars in upfront cash. We saw Hilton and Marriott sell billions this year for future use to the credit card companies. So, the loyalty programs need people to use those points. So we've been seeing incredible promotions. Even this Black Friday, Virgin Atlantic is selling their miles at a half off. You can fly New York or LA to London for basically $1,000, $1,500 when you factor in these promotions. So it's a great time for consumers. And I don't foresee, prices going up for a long time because simply, it's supply and demand. And there's still so many people sitting it out until they can get a vaccine, which may not be till the end of next year. So it's a good time for deals.
All right, but something's got to give, Brian, right? I mean, we're looking at a market that's been decimated. If you look at the losses in the airline industry that were projected this week, billions and billions of dollars. How are they going to recoup that? And if they don't, does that mean no soda, charging for your luggage? I mean, I'm just talking about the practical implications of the quality of life aspects of these hospitality industries.
Well, it's funny because the airlines have actually made it better for consumers in waiving most change fees. You can now book the cheapest flight and change it for free. They say that's going to be forever. But I agree with you. A shoe's going to drop at some point. But the way they're doing that is by managing capacity, by retiring old inefficient jets. The industry has been right-sized. But I don't foresee any punitive changes to consumers anytime soon.
Yeah, but Brian, we talked to KLM's CEO this week, and KLM and Air France are talking to the Dutch government about a bailout, and there's a dance in the United States, Southwest Air making headlines in the last 24 hours. From where you sit, Brian Kelly, do you just assume that we're going to see more government aid to the industry to get them to the other side of the Point Sky Bridge?
I don't see it. We saw Norwegian Air got the big no from their government. The U.S. Has since, not really been willing to extend, although the U.S. CEOs are in Washington every other day begging for it. I think, these publicly traded companies, have learned a lesson that you should probably stock up a little bit more on cash. I don't foresee another big bailout. I think they just have to right-size things until the demand returns. I mean, this summer, just because of the pandemic, Lisa was going through the Adirondacks. I don't know, Brian, if you know, the Adirondacks are mountains north of New York City. And she was doing like canoeing and portage and all that. She's trying to use her point miles off a major bank to help her pay for the portage between the lakes. What are the banks going to do here? I mean, you change this, Brian. What is the next step for the banks? You get 200,000 points? It's funny you say that. The banks this summer really took a break from big promotions, I think because the credit risk was just so unknown. Are people going to be defaulting left and right? It appears that's not the case, although we're not quite sure how many consumers are defaulting because people have been given so much forgiveness. But the banks came back with huge offers this fall. We saw big sign-up bonuses. And I have seen a shift towards more flexible points instead of credit cards that offer airline miles. Now, even Chase is offering to use your points on groceries at a really rich rate. So I foresee the credit card companies allowing those points to be more flexible for use on things like merchandise.
I'll tell you, Brian, through this pandemic, thanks for keeping the spirit up. It's really wonderful during a pandemic to see Mr. Kelly in the Maldives, and he got there for $142 and 6 gajillion points that Lisa and I could never.
I'm going to Rwanda this Christmas. That's
of course you. Why am I surprised? Brian Kelly, go away. The points guy traveling to all the places Lisa and I would kill to.
Tom, I just want to make a Bloomberg surveillance correction.
Please.
You cannot use your points to portage. I learned this the hard way. I tried.
I can't because they get the truck out and put the canoe on top of the Jeep. So, yeah, you need your points to portage. It has been something here, folks. We've had quite a good 3-day week. And, again, more data coming here in the 10 a.m. hour today. We're going to get a lot more data, and you can see that. Mike McKee will have all that for you. Lisa, what do you observe in the market? I mean, I loved your thoughts today on the zombie bond market. It's really settled down, hasn't it?
What's interesting to me is the muted reaction all around from the data. And yes, you had some conflicting data, but the idea here that we have a labor market that is worse than people had thought, that is getting worse as we get into the winter months that are only going to get harder. You are seeing a bit into the bond market strengthen with yields near the session lows, 10-year yields down 0.8684% since we go out to 4 decimal places for you, Tom. I'm wondering, though, at what point do we tip the scales into a change in narrative? So far, we don't have that when you look at equities.
Well, it will be interesting to see. Let me do a data check here. I'll start at the backside, which is commodities, our interview of the week in commodities without question. Jeffrey Curry of Goldman Sachs talking up a new bull market in commodities. And, boy, you see it with Brent crude, world oil, $48.25. That's got to be my surprise of the week there. John Farrell mentioning copper earlier in the FX space. Dollar weakness, the yen 104.43. Lisa's asleep in the bond market. No surprise there. In the equity space, red and green on the screen. Interesting to see how we stagger on always an interesting Wednesday into Friday and into next week as well. Coming up, an important conversation. Dr. Navarro, President Trump's very strong advocate for stridency to China, in conversation with Kevin Cirilli on Balance of Power. Stay with us through the day. This is Bloomberg Radio and Bloomberg Television.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes away from the opening bell and equity futures down about 0.1% on the S&P 500. We begin with the big issue. Clarity emerging on Wall Street, driving global equities to fresh records.
Exuberance has been off the charts.
The market have good reasons to extend this risk rally up.
It's a very different type of rally.
There's less uncertainty.
It's a very unusual situation where there's more clarity.
We have this perfect storm around some clarity.
The uncertainty from the election is gone.
The markets are sitting thinking, gosh, transition's coming.
We have clarity of the peaceful transitions of the new leadership in the U.S.
A Yellen Treasury Department.
More positive developments on vaccine.
The vaccine is really the biggest game changer.
Investor now focus on the recovery outlook.
There's a lot of positive undercurrents there at some pretty undemanding valuations.
All Wall Street sees is easy money.
Equities have materially further to run.
We've had a series of market-friendly developments unleashing animal spirits across Wall Street, contributing to a massive rotation in leadership out of the lockdown winners and into the reopening laggards. President Trump making a rare appearance to celebrate the milestone.
I just want to congratulate everybody. The stock market, Dow Jones Industrial Average just hit 30,000, which is the highest in history. We've never broken 30,000, and that's just despite everything that's taken place with the pandemic.
Despite the pandemic, markets living in the future, a brighter future, looking through the difficulties of the here and now, the tightening restrictions, surging infections and constant warnings from state and local officials. Investors positioning for normalization, whatever that is, a more familiar post-COVID environment, the future with a vaccine.
We're already working out, meeting with the COVID team in the White House and how to not only distribute, but get from a vaccine being distributed to being a person able to get vaccinated. So I think we're going to not be so far behind the curve as we thought we might be in the past.
We all hope so. 28 minutes away from the opening bell, we pulled back a little bit from all-time highs, but it was record after record, Kaylee Lines, in yesterday's session.
Yeah, 30,000, John. I know you don't like to look at the Dow, but nonetheless, it was a milestone. Of course, the rotation happening fast and furious, but so far it has proved sustainable. Everything we just heard from the vaccine, the recovery, the political trajectory, aiding risk sentiment. Now, we are seeing that rotation trade reverse just a touch this morning. The Nasdaq 100 looks set to open in the green, while the S&P 500 and Russell 2000 look set to underperform. But one day does not a trend make, John. A month perhaps does. And if you look at the month of November thus far, you can see that cyclical tilt really taking shape. Not even a tilt, it's a cyclical blowout. The Russell 2000 small cap index up 20.5% so far in November. That is poised for the best month on record. And the equal weight S&P 500, in which Apple has no more importance than a stock like Under Armour, is set for its best month since 2009. On the other hand, the S&P 500 and Nasdaq 100 not even set for their best months this year. That underscores both the breadth of the rally and the lack of leadership from big tech. The leadership instead has come from your classic cyclicals, energy, up some 30% in November. Industrials and financials up the better part of 20% as well. It is that recovery trade taking shape. And that does apply too to those domestically oriented small caps, which I just mentioned. And another stat, John, aside from that performance month to date, is that year to date, the Russell 2000's gap in performance versus the large cap S&P 500 is only at 1.4 points. So that underscores the velocity with which the Russell 2000 has moved. And you can see that as well in momentum. The RSI, the 14-day RSI on the Russell 2000 sitting at a 74 handle. The gap now between the RSI on that index versus the S&P 500 is at the highest in 2 years, John.
Kelly Lines, thank you very much. That's the price action of the last 24 hours, the last month, a record-breaking month through the month of November for global equities and for various markets as well, including Europe too. It's been about that tug of war. We talked about it 3 Mondays ago when we first got that improving vaccine news, the near-term risk versus the brighter forward outlook. We've asked the question, how much would you tolerate in the near term? The bad news, the drip feed of it. Last week, jobless claims going the wrong way. This morning, jobless claims going the wrong way. We look right the way through it to a better year ahead. BMO's Brian Bowski expecting the rally to continue next year as well. He writes the following. We expect another year of double-digit gains as the economy and society slowly transition back to normal. As such, we forecast that the S&P 500 will rise 15% and reach 4,200 by the end of 2021. Let's bring in Brian Bowski now, shall we? Brian, great to catch up with you, sir, as always. Can you walk me through the breadth and the participation of this rally, this record high compared to the record high we printed, say, several months ago? How much healthier this one is?
Thank you so much for having us. Yeah, I think this is all about the transition to better breadth, better performance on a fundamental basis, and really a fundamentally led stock pickers market. I think where most people have it wrong for 2021 is this automatic transition back to normalcy. I just don't think it's going to be that easy. If 2020 taught us anything, we're still going to have fits and starts, momentum, rhetoric-driven market. Look at the month of November alone in terms of this binary decision to buy cyclicals and value stocks again. This was clearly just trying to add underexposure to those areas that have been underperforming. With respect to your question in terms of leadership, you know, clearly the stay-at-home stocks, and specifically the communication services and technology sector, at being 40% of the market, clearly skewed the performance early on. But I think we as investors and we as society have learned now how to deal from the chaos of COVID-19 coronavirus and what it did to our professional and personal lives into now coexisting with the virus and now having the hope and the faith of having vaccines be omnipresent. But I think the reality of it, Jonathan, is that the first half of the year, 2021, is still going to be kind of this back and forth momentum-driven trading. Remember, we probably have increased lockdowns coming across the country in the United States as Mr. Biden takes over. I think that's going to be a big deal. And I think part of that is the growth trade is going to be back on again. And I think the death of tech has been way, way, way too over-exaggerated.
You're staying with big tech, Brian, for that reason?
Well, we're neutral, so we're market weight, which is a big call for us, quite frankly. As you know, our work for several years, we're secular bulls on tech and communication services. We're not saying sell tech, we're saying maintain your positions. Think about this again, it's 40% of the market if you take communication services and technology. I'm just saying don't sell, add on weakness and trim a little bit when the market rallies. And I think we have another big move in the stay-at-home stocks. And it's rather contrarian because everyone's now decided that's a value market. But just be careful on that. Think about this. Several industrial stocks are at or near all-time highs already. And where financials, really where we think you get the best fundamental value, most of them are still hovering near all-time lows. I think that's really going to be the big trade that people are underexposed in.
Brian, let's build on that a little bit then, because there are two overweights that I've seen from the work over at BMO, industrials and financials. Can you just walk me through the banks and why you think that's more than just a quick catch-up trade this month and there's more to go from here?
We think that's a really big opportunity. If you think about this, and you've been doing this for a long time, you've had a lot of guests, how much hatred there is for the U.S. financial sector. And then we had the issue with not being able to pay dividends and buybacks in 2019, further questions. We think the scale... the theme for financials is scale. You want to buy scalable assets. And we think the most scalable assets in financials are the money center banks, the brokers, and the asset management business. I think regional banks, given the absolute level of interest rates, are going to suffer a little bit more than the big banks because they're multi-divisional assets with respect to line of businesses, and we think they're massively under-owned. You know, Bank of America, JP Morgan, Morgan Stanley, Goldman, BlackRock, I think that's the place to be. I think some people want to play the regionals in terms of the beta trade, but we really think the alpha trade are the money center banks and the brokers, and we think, again, they're underexposed, especially globally.
So, Brian, I've got to say, of all the forward outlooks I've read for 2021, yours is one of the more nuanced ones. So we're looking out to next year, the near term, some trouble ahead. Stick with the secular growth players, the big tech theme. Got it, understood. The cyclical trade, most people would just say blanket rotation. That is not what you're saying. You're talking about the financials, the industrials. You're not talking about energy. And energy this month has just had a blowout month. And, Brian, as far as I can see in the notes, you're still underweight. Why, Brian?
Fundamentals, Jonathan, if you have supply issues still there, especially in the U.S., U.S. energy companies need a higher price of oil, number one. If you think about a sector now that is less than 3% of the market, 3% of the S&P, we had massive short covering, we believe, also. In this perceived move back into value, you're going to play energy companies. But if you take a look at where debt levels are, where cash flow is, and more importantly, I think earnings growth going forward, and then again, most importantly, as I said, you need a higher oil price, and oil prices are still below $50. We've had a nice little uptick here. But given the impact and the emphasis on renewables and things like that, we like Canadian energy a lot more than U.S. energy. We think this is a bounce back coverage in terms of short cover. This is not a fundamental trade. This is more momentum trade, and we would be scaling out of U.S. energy after the big bounce.
Brian, always enjoy catching up with you, sir. Send my best to the team, won't you, ahead of the Thanksgiving holiday. Brian Bowski there of BMO on the outlook. And I've got to say, the 2021 outlook over at BMO actually really, really nuanced and quite interesting to try and get your hands around. Energy not part of that big cyclical blanket overweight that we've heard so much of over the last month. Energy this month up almost 40% on the S&P 500. Let's get you some movers. What a month it's been. On the movers at the market desk, we can bring back in Bloomberg's Katie Greifeld. Hey, Katie.
Hi, John. Well, we had plenty of companies reporting this morning, and that is driving early price action. Deere is an early star. It's up about 3% in the pre-market after a strong report. It beat estimate and it raised its outlook for 2021. Nordstrom is also having a good morning after beating on sales and EPS. Revenue did fall 16% year over year, but still beat estimates. Now, moving down the board, Gap is down over 12% in early trading, nearly 13% now. Its Old Navy sales were a bright spot, but sales at Gap and Banana Republic both fell. Nikola is also plunging after CEO Mark Russell did not confirm on CNBC last night whether its $2 billion deal with GM will go through. Now, both sides have an option to quit the deal next week, so keep an eye on this one. Back to you, John.
Catherine, thank you. We'll catch up with you around the open and bell in about 19 minutes' time, with equities unchanged on the S&P 500. Up next, President-elect Joe Biden continuing to fill out his cabinet, exclaiming that America is back. That conversation up next with JP Morgan's Bob Michael. From London and New York this morning, good morning. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Today, I'm pleased to announce nominations and staff for critical foreign policy and national security positions in my administration. It's a team that will keep our country and our people safe and secure. It's a team that reflects the fact that America is back, ready to lead the world, not retreat from it.
From America first to America is back. President-elect Joe Biden turning the page on his predecessor's unilateralist approach, but the Trump administration potentially leaving obstacles in his path, with Treasury Secretary Steven Mnuchin putting clawed-back funding beyond his likely successor, Janet Yellen. Bloomberg International Economics and Policy correspondent Michael McKee joins us now for more. Morning, Mike.
Good morning, John. Well, Joe Biden getting kudos for his cabinet selections, as you saw his national security team announced yesterday. Also, his choice for Treasury Secretary leaking yesterday, and that's what got applause on Wall Street. Janet Yellen will take the reins, and that sparked a rally among equities yesterday. Competent and predictable. She is seen as that, not too heavy on regulation, a steady hand to bring the economy out of the crisis, and she makes money for traders. Look at this. Stocks gaining a compounded 12.6% during her tenure as chair of the Fed, even at a time she was dramatically raising interest rates after 7 years at zero. Now, she might not have direct influence over stocks as Treasury Secretary in that she won't be in charge of QE, but she will be in charge of bonds and the dollar. How much and what kind of stimulus will she support? In part, that will depend on whether there is a lame duck deal for stimulus before she gets confirmed. If not, one immediate decision she'll face is the fate of the Treasury Fed lending programs that you mentioned. Current Secretary Steven Mnuchin is trying to kill. He wants to put the remaining money into the general fund, so a Yellen Treasury can't tap it to backstop Fed lending unless Congress approves. Mnuchin could sabotage the Biden economy by doing that, but we don't know if it's going to be needed. Right now, it is not. If there is more stimulus, how much additional debt will she go for? She's always been a budget hawk, although recently she suggested this is not the time to worry about the deficit. She also needs to weigh in on Trump's China tariff battles. After years of saying the dollar is Treasury's problem, not the Fed's, it's going to be interesting to see what Yellen has to say about dollars since she's in charge of the policy now. Does she go back to the old Reuben Summers strong dollar policy or embrace a weaker currency to boost exports and help create inflation? And how does she communicate that dollar policy? All interesting things for Wall Street to contemplate as the president-elect gets ready to announce her selection perhaps next week.
She might even do the unthinkable and blame the Fed. Who knows, Mike? Michael McKee is going to be back a little bit later on the economic data. I sincerely doubt she'll be doing that anytime soon. JP Morgan's Bob Michael expecting markets to welcome Janet Yellen to her new post with open arms. He writes the following. She's a great pick for Treasury. Given the convergence of monetary and fiscal policies through modern monetary theory, the Fed seems comfortable with a steeper curve and a 10-year around 0.8%. But that should drift towards 125 as vaccines are distributed. Bob joins us now for more. Bob, if they're willing to tolerate it, if things are going so well right now, what's the 10-year doing where it is? And what's the yield curve doing precisely where it was at the back end of October?
Hi, John. The reason yields are where they are is there's just so much money looking to come into the market. And people are accepting that central banks are going to keep rates at or around zero, negatives in some regions for the foreseeable future, and they're looking to put money to work. And I can tell you, it's frustrating to see yields at these levels. It's frustrating to see credit spreads at these levels. We've been through this before after the financial crisis. As long as the Fed is at zero, money will come into the market. The only thing we're doing is working with clients on how to get cash invested. And for us, the most important chart is that money market flow analysis, where $1.2 trillion went into money markets during the crisis. Only $700 billion has come out. So there's another $500 billion minimum to go. And by the way, those numbers were elevated by about $1 trillion heading into the crisis because of the trade war. So there's a lot more money that can come into this bond market. It doesn't happen in a few quarters. It happens over a few years.
Bob, build on that for us. The conversations you're having at the moment, the so-called cash on the sidelines. We've been talking about this, you and I, now through the whole of this year, the amount of money in money market funds. For the clients that you speak to right now, what are the objectives they have? And do they feel uncomfortable if that money's been sitting there and they've missed out on this massive move? Credit spreads tighter, equity markets to the moon.
Yeah, they do feel very uncomfortable keeping large amounts of cash. I think what shifted is the opportunity to take advantage of cheap markets and buy high yield or credit or some of the securitized or emerging markets back in the second quarter. And now they're saying, hey, I'm earning zero. How can I get greater income? So there's a tremendous focus on income again. And that's, of course, pushing everyone to look at credit strategies and at the emerging markets again. Everyone goes through this period of things feel really good today. There are concerns on the horizon. Maybe I'll get a better opportunity to buy. But what we're seeing is what we saw after the financial crisis. Every backup is met with buying, so you're not going to get the backup that everyone wants.
Bob, you brought up the parallel there with the financial crisis. Is that a decent one, or do you feel like this could be more of a 2016, 2017 dynamic? 16, a bit of a rough year. 17 was when we got that big pickup in synchronized global growth and the happy talk that lasted a good 12 months. What's the better parallel for you, Bob?
I think earlier in the financial crisis, I think people forget there was a lot of optimism when TARP was deployed and the Fed began QE. And of course, people were still talking about the Fed summary of economic projections. The infamous dot plot was out there at 4.25%. And there was this expectation that normal was just around the corner. And we learned that that doesn't actually happen. There are lots of fits and starts. And I think we're in a period of fits and starts now. There will be a reopening when the vaccines hit. There will be a surge in GDP. But then you're left with a global economy where trillions and trillions of dollars of debt have been piled onto every level of government, to businesses and households. And that creates its own natural headwind, which the Federal Reserve and other central banks and their treasuries have to work hand in hand to ameliorate.
And arguably, it means that any sell-off in debt is self-limiting, Bob, specifically in the treasury market. Bob, many people are thinking about this. We're all on the same page, seemingly going into next year. It feels so consensus already. Next year, better year for growth, EM, local currency, weaker dollar. You've heard it, you've talked about it. Bob, where do you go for safety at the moment then? If you need something on the other side of the portfolio, because you're looking around and just thinking this feels so consensus going into 21, where do you find that, Bob?
Well, that's a really good question. I would say there's a big potential pothole over year end. A lot of the support programs that have been in place through CARES expire. And of course, now you have the 13.3 facilities could be withdrawn at year end. So that's something that the market still has to digest. I don't know that it's fully digested it. And that all happens as we should arguably see a spike in infection rates and unfortunately probably mortalities. I think for safety, you just stick with investment grade credit. So whether it's some government bonds with higher yields, you could look at places like Australia, or you could look at Italy or into some of the emerging markets, or investment grade corporates, you could look into the bank sector.
Bob, can we just confirm you are at work today in the office and that's not one of those Zoom backgrounds? You actually in the JP Morgan office today before Thanksgiving?
And actually, there are some people that are here, although admittedly, it's pretty light, as it rightfully should be a day in front of the holiday.
Of course. Bob, you enjoy the holidays and send my best to the family and to the team at JP Morgan as well. Bob Michael of JP Morgan Asset Management. Bob, always appreciate your time, sir. It's valuable. Thank you. Coming up on this programme, the analyst action you need to know. That'll be next in our morning calls. Then later, around the opening bell, I can tell you a very happy JP Losky of TPW after the month we've just had in Europe. It's coming up later. This is Bloomberg.
Einmal noch ganz kurz zu uns kommen, ganz kurz.
Davor stellen.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Five minutes away from the opening bell, equity futures not doing a whole lot on the S&P 500, basically unchanged, near all-time highs. Let's get you the morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Morgan Stanley downgrading Caesars Entertainment to equal weight, $67 price target. The analyst expecting a challenging winter with rising COVID infections threatening additional casino closures. Your second call from Citi downgrading the Gap to neutral, $27 price target. The analyst citing a number of catalysts, including the stock's valuation and concerns emerging from the company's earnings call. Morgan Stanley also downgrading Ford to equal weight, a $9 price target. The analyst citing major headwinds and cloudy strategy for transitioning deeper into the EV market. That stock is down by about 2.4%. Up next, a very happy Jay Poloski at the open.
It is important for each side to understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of communication with China that frayed during the Trump years, or risk a crisis that could escalate into military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Let me tell you a lovely bedtime story for equity market bulls, a nightmare for equity market bears. The year's 21. Got a vaccine. We're getting back to normal. The printer-in-chief now runs the Treasury, and countries don't argue with each other. China and the United States may even get along. Do you like 2021? Tell you what, a lot of people have fallen in love with it already before we've even got there. The equity market coming into Wednesday at all-time highs across the board. On the S&P 500, futures not doing a lot. The Nasdaq up about 1/3%. That's the opening bell. Switch up the board in the bond market. Treasuries look a little something like this. Your 10-year yield comes in a basis point. A drip feed of negative data from retail sales to claims. PMI's okay. Durable goods, decent too. I should rephrase that. PMI's fantastic earlier this week. And this Treasury market caught somewhere in between, not going anywhere at 87 basis points on a 10-year. Euro dollar just south of 119 at 118.98. We're unchanged there too. And in the commodity market, crude post-pandemic shock highs on WTI, $45 at around about 60 cents. We advance about 1.45%. That's the story in the market in the here and now. For global equities, we have hit record highs with vaccine developments and clarity in D.C. driving risk sentiment. BMO's Brian Bowski expecting the momentum to continue.
This is all about the transition to better breadth, better performance on a fundamental basis, and really a fundamentally led stock pickers market. I think where most people have it wrong for 2021 is this automatic transition back to normalcy. I just don't think it's going to be that easy. If 2020 taught us anything, we're still going to have fits and starts, momentum, rhetoric-driven market. Look at the month of November alone.
A return to normalcy, and I'm not even sure what normal is anymore. For more, let's bring in Bloomberg's Katie Greifeld. Hey, Katie.
Hey, John. Well, as Brian just laid out, it's been a banner month for stock markets, not just in the U.S., but around the globe. MSCI's all-country index, which includes developed and emerging markets, hit a record high this week, and that's with the S&P 500, the Dow, the Russell 2000, all at record highs, even though they're taking a bit of a breather this morning. Now, in addition to vaccine optimism, central banks have really helped fuel this rally as well. And you can see that in Goldman's U.S. Financials Condition Index. It's back near record lows, and that just speaks to how accommodative the Fed has been this year. And I also want to point out that the latest leg higher in stocks is coming on fairly high trading volume. Typically, turnover cools during holiday weeks, but not in 2020. Volume has actually doubled this Thanksgiving week versus last year, so no holiday slowdown to speak of. Back to you, John.
Katie, thank you. No one's going home because they're already at home, where they've been trading for much of 2020 so far. In this market right now, we pull back by 1/10% on the S&P 500. Information technology on top, advancing 1/4%. It's kind of the opposite story of the month on the session. Bottom of the pile, energy down by 1.76% on the month, up by almost 40% for the month of November. Let's work our way forward with this. TPW's Jay Pawlowski recommending investors stick with the cyclical rotation. He writes the following: don't get off the good ship rotation. There's plenty more to go. And use pullbacks to add to value. Cyclicals, non-US especially. Guess where? Europe and Japan. The vaccine and reopening as tech kryptonite is working. Jay joined us on the phone. Jay, I can't believe you're on the phone and not in front of a camera, because I can only imagine how big your smile is after the month of November. Jay, you tell me why you think this is set to continue.
John, you know, you and I have gone back and forth on this for some time, and I really do wish I could be in camera. And even more than that, I wish we could go grab a drink together and talk about it, because it's been a heck of a run. Look, I'd make 3 points. One, the clarity you spoke of allows us to start to think about a better future. But we've only up, the S&P is only up less than 2%, John, over the last 3 months. So yes, we've had a big recovery, but people forget September, October, the market chopped around and was actually lower. So over 3 months, which I think is better to look at than a couple of weeks, the S&P is up less than 2%. Is that all we're going to get from clarity on a vaccine, on election, on stimulus? No, we're in very early innings. Why? Because we're having a global economic boom, I believe, in 2021 and 2022. We have record liquidity. We have a melding with Janet Yellen and Christine Lagarde of fiscal and monetary policy. We have a vaccine. We have the Fed on hold. We're going to have an EPS boom, a buyback boom, etc. And what does that do? That sets us up for the global rotation, not a trade. I'm dropping the word trade. Global rotation in the best global asset allocation opportunity set we've had in a decade.
Let's build on that. I talked to Bob Michael at JP Morgan. I asked for historical parallels here. He went with early crisis coming out of 07, 08, 09. Jay, you going with 2017?
Something like that, but I think it's going to be longer lasting than 2017. Let me give you a couple of numbers to support that thesis, John. First of all, we are looking for global growth next year to be 6% or better. The last time global GDP grew over 6% in 1 year was in 1973. The time before that, 1964. Let me give you a couple other numbers. Over the last 2 years, the S&P has doubled the performance of ACWI ex-US, up 38% versus ACWI ex-US up 18. Over the last 5 years, the S&P outperformed by 50 percentage points, up 75% versus ACWI ex up 25. I think we are just in the very beginning of an asset allocation shift away from U.S. equity, away from tech, away from bonds, away from the dollar, all the things that have run for the last decade. We've really been in a one-decision investment world since the bottom in 2009, John. And for the first time, plus with the advent of technology and the rise of thematic investing, for an asset allocator who looks globally, we are in a super sweet spot where the non-U.S. markets are going to outperform, particularly Europe and Japan. I'll just make one other point. Bank of America's fund manager survey, very well respected, top trades for 2021, first emerging markets, second U.S. equities. Europe, Japan, EFA, not in the top 5. That is the opportunity set, cyclical value markets. I think bonds are beginning a secular bear market. Dollar's going to go weaker. Commodities are going higher. So there's just a absolute global playing field if you're a global multi-asset investor.
Jay, I'm making a list of this in my head, and I'm just ticking each box as I work through it. EM, starting to see the outperformance, credit spreads tighter, local currency doing nicely. BBDXY, the broader weighted dollar index here at Bloomberg, much, much weaker. Tick. You see the story out of big tech into the cyclicals, the banks, energy, great month of November. Tick. Credit spreads high yield, still tight. Primary market, nicely buoyant. Tick. Then I get to the treasury market, and I get to this call about higher yields. And I look at treasuries, 2s, 10s, the curve, not doing much. Look at the copper-gold ratio. That's doing its thing. Trying to work out why the treasury curve isn't. I look at the nominal 10-year yield, not doing much. Trying to work that out. That's the box I can't tick right now, Jay. Why do you think we're going to be able to?
Well, we love that, John, because you got to have things, catalysts to take us higher, right? And banks, we've talked about it. I think I was on your program a couple months ago called the European Banks, a screaming buy. They're up 30% since then. Guess what? Still a screaming buy. Trade at 0.6 times book value with a economic recovery, higher rates, dividends, buybacks, M&A, et cetera. Here's the thing on the treasury market, John. It's probably going to be the last thing to go. It's like technology, okay? It's been in a 30-year bull market in sovereign debt in the U.S. and Europe. 30 years. So it's not going to die easily. But it's going to die, and it's going to die because we're going to have 6% global growth next year. We're going to start to get a whiff of inflation. We're going to have continued huge supply. We're going to have the buyers of that supply in the last year or so, primarily the big money center banks, going to start shifting their books away from the treasury market. Foreign buyers are going to buy less of it because the dollar's going down. And so I think you're going to see 1.5 to 2% on the 10-year treasury a year from now. And you can mark that. The consensus, I believe, is for around 1.4, 1.5. In Bloomberg, you probably have the number in front of you. I think it's going to be closer to 1 3/4, 2%. And guess what? The Fed is not going to limit that move. The Fed is desperate for inflation. It's already told us that with the AIT. We're going to have 2 to 3% inflation over the next 12 to 24 months. And guess what? Fed is going to be happy with that. You do not want to be long duration government debt. Absolutely not. We're in the beginning of a bear market.
BYFC is the function on the terminal. Bond yield forecast 120 on the 10-year for year-end 2021. Jay, 2%. Let's just work this through. 2% you think, 125 consensus. I never want to sit here and say consensus is going to be right, but I will ask this question. Don't you think our tolerance for higher interest rates has greatly diminished over the last 9 months, given the amount of debt we've added to this economy?
Absolutely not. Look, John, it's not the amount of debt. It's the carrying cost on that debt. And the carrying cost is absolutely de minimis. I mean, we have historic lows on mortgages. We have record net worth in the American consumer, between home prices at all-time highs and the stock market at all-time highs. This is the thing that people don't really get. Consumers are flush for the most part. You know, there's a great deal of focus on folks who are not in that position, and there should be focus on those folks, and they do need government help, and they do need support. But broadly speaking, we are household net worth is at an all-time high. I think there's tremendous capacity. Financial conditions are at all-time ease. There's a lot of room, John, to push rates up. Remember, a year ago, the 10-year was over 2%. It's not going to be a problem.
Jay Pawlowski, you know I could say something mean about broken clocks, but it's almost Thanksgiving, and I just want to say it's nice to hear from a happy person who's very happy about this monthly performance. And, Jay, I hope it continues
Happy Thanksgiving, John.
Hey, Jay, happy Thanksgiving to you too. Always a great sport, and appreciate you coming on the programme. Thank you, sir. Let's get back to these markets and get back to the market desk. Back with us, here's Katie.
Hi, John. Well, let's start with IBM. The company said today it's planning to cut 10,000 jobs in Europe, about 20% of its workforce in that region, and the stock is down about 1.5% already. Now, HP is up about 3% after shipping a record 19 million PCs in the third quarter. Revenue fell, but still beat estimates. Now, also on the earning front, I want to highlight Deere and Gap again. Deere is starting to pull back even after raising its 2021 outlook. Gap, meanwhile, deeply in the red, down 16% after disappointing this morning. And that's after shares had rallied 10% into today. So a bit of a pain trade going on there. Now let's check in on the banks. It's red across the board this morning as that cyclical rotation trade cools a bit. Now, banks have had a fantastic run, up about 20% in November alone, but still the S&P financial sector is down 6% this year, even though trading revenue may top $100 billion this year. But they have about a month left to try to break even in the equity markets. Back to you, John.
Katie, thank you. Thank you very much. Just a small pullback on the S&P 500, down 0.2%. Up next on this programme, just had a slow drip of poor economic data in the labour market in America. That conversation coming up next with Morgan Stanley's Jim Kerrin from London and New York. This is Bloomberg.
In our interconnected world, if people in low and middle income countries miss out on vaccines, the virus will continue to spread and the economic recovery globally will be delayed. Equitable access is in the national interest of each and every country.
But this also means if we have a vaccine, we should have a common approach to give a fair share to everyone so that the most vulnerable groups, the frontline workers and the healthcare workers, for example, are the ones who get the vaccine first.
We're donating another $70 million to fight COVID-19. $50 million of that will be for buying vaccine doses for low-income countries, and another $20 million will be for researching even further and new vaccines altogether.
Il nous faut nous assurer que les conditions réglementaires et politiques sont toutes réunies pour un accès le plus large et rapide possible à ces produits, tout en respectant les standards internationaux de qualité. C'est pourquoi la France propose que puisse être rapidement adoptée une charte d'ACTA qui réaffirme ces grands principes. Partager la connaissance, soutenir les systèmes de santé, avoir des produits rapidement accessibles et abordables.
The market may be a little bit ahead of itself.
There is still some risk to the downside.
The U.S. economy is slowing down,
especially in the very near term.
Severe economic contraction, super high unemployment.
We know we're going to have a sharp slowdown over the next few months.
U.S. data may be getting a little worse into December.
Creaking a little bit under the weight of the virus.
We're far from out of the woods.
We're going to see this ongoing narrative of vaccine versus virus play out.
We've got to look through that near-term double dip.
This market's been looking through it, but rising COVID infections and tightening restrictions have been taking their toll on the US labour market and the recovery. Further evidence coming in today's jobless claims. I want to bring back in Bloomberg's Michael McKee. Mike, last week's same story repeats itself this morning.
Yeah, John, we've got a tug-of-war going between the contemporary data like jobless claims and the other data we got today, a cornucopia of Thanksgiving data that show a little bit better numbers for the economy. But let's start with jobless claims. That catches everyone's attention on Wall Street, 778,000. That is an upside surprise, a significant one. The forecast was for 730, last week 748. It does show that with all COVID cases rising around the country, we are seeing more and more companies shut down, restaurants, bars, and the like, and people filing for jobless claims. Other numbers that you could trade on, the trade balance widens to $80.3 billion during the month of October. We also look at the durable goods orders up 1.3%, capital goods orders up 0.7%. All of those will have an impact on the fourth quarter GDP, rather, because they're all October numbers, but they are a bit delayed. As you can see, no change in GDP for the month. Let's take a look at those jobless claims. It's the second week in a row that we have seen jobless claims rise and rise unexpectedly, and that's the first time since July. It really tells you that we are seeing an impact that will have a longer-term impact on the economy. Without a job, you don't have money to spend, and consumption, 2/3 of the economy. The other one that people are going to pay attention to is durable goods orders and durable goods shipments. I didn't have shipments on the chart here, but shipments were up 1.3%. That means good news for the economy in the fourth quarter as more stuff goes out the door. We're also seeing, as I had on that list there, wholesale and retail inventories up during the month. The factory sectors has been performing okay. It is the services sector and the consumers' paychecks that we're starting to worry about, John, as the high-frequency data starts to show the effects of the COVID spread throughout the country.
Not going in the right direction. Mike, great to catch up, as always. Michael McKee there at the desk going through some of the numbers. Morgan Stanley's Jim Caron saying he's bearish on treasuries heading into year-end. gives us the why. Says the following: GDP needs to rise sufficiently in the next 2 years to close the output gap. Otherwise, excesses will continue to build in the economy. Given that, we think rates rise in 2021. We want to reduce interest rate exposure. Jim joins us now. Jim, always fantastic to touch base with you, sir.
Good morning.
Let's just start with this then. You think Treasury yields go higher? You want to go down in quality in the credit market, I assume, at a time when near-term risks of building and the economy is getting worse, at least for now. Jim, how comfortable are you with that?
Yeah, so I think it's a question of timing. So I agree with many of the comments that were made earlier on your show that effectively we're going to go through a tough period right now. But really the question is the look through to the second quarter and to the third quarter. But Jonathan, look, I think there's a very, very important part of the narrative that's missing here that I don't hear spoken about enough, and that is of the output gap. And I alluded to that in my note. And what I'm saying here is that if we were supposed to have 2% growth this year and we end up with -3, then that means we're off trend growth by 5%. If next year is a good year and consensus is any guide and we grow 5% next year, we're still below trend growth. So the point is that we have to have not just a good year in 2021, but we need to have a good year in 2022 in order to close the output gap, get aggregate demand to build up, and actually move into some excesses there where we can actually have more demand than actual supply. And that's going to allow bond yields to really, really rise. So what I'm saying here is that next year, if we have 5% growth, 6% growth, or somewhere in that neighborhood, we're on our way, and bond yields should adjust higher. And I would argue in that 1.25 to 1.5% range. I think that would be a reasonable place. It could overshoot, it could undershoot a little bit, but I think that's reasonable. But the point that we have to understand, and what the Federal Reserve is looking at, and also the federal government, is that effectively we're working with an output gap, meaning that we do not have enough aggregate demand to sustain higher yields unless we continue to get better data going forward, not just through 2021, but also into 2022.
So we've got a time horizon debate now to have then, Jim. If you believe it takes 2 years then to close the gap, I know some people who think it takes much, much longer than that. Yeah. How can you be bearish treasuries? Wouldn't you have to wait for 2022? Isn't this a show me story?
Yeah, I think it is a show me story. But, right now, from the starting point, if we're at, 85 to 90 basis points, I think it's reasonable to expect that if the second quarter growth is really strong and third quarter is strong and we have a vaccine, that there is going to be an upsurge in aggregate demand. Because what we have to remember is that there's a lot of pent-up demand that's still in the economy that hasn't yet been put in. And I think there could be a surge higher.
Well, you see that in the savings rate, the household level. Jim, just a final question from me. The Treasury market, do you think the Fed will allow what you described to actually happen? And isn't that the ultimate call here? Because for many people, Treasuries haven't made a move, and many people believe that is because the Federal Reserve may extend the average maturity of their bond buying. Where do you stand on that, Jim?
Yeah, I think it's likely that they do that. And I think it may even happen at the next meeting in December. So, look, I think the point here is that the Fed looks at treasuries as almost a part of a bigger equation of financial conditions. So if the equity markets are doing well and if the unemployment rate is falling fast enough, the Fed is perfectly happy to allow 10-year Treasury yields to rise up to 1.25, 1.45%, and that would be fine. If those things aren't happening, then the Fed will not be happy with that, and then they would exert their pressure on putting downward pressure on lower yields.
Jim Caron and Morgan Stanley. Jim, always great to catch up. My best to the team, and a big thank you as well for working through all these different situations with me on this program over the last 9 months. What a 9 months it's been for the global economy and for markets as well. Up next on this program, the market moving events you need to be watching going into the weekend. That'll be next in our trading diary for our audience worldwide. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
What's a rotation when it goes into reverse? A reverse rotation, maybe that's what you have this morning. The Russell down 0.9, the Nasdaq up 1/3%, and the S&P 500 pulls back from all-time highs. Here's the trading diary, what to look out for through the week. Let's get you up to speed. We get US personal income and spending figures at the top of the hour, plus the University of Michigan sentiment survey as well. Then later, the FOMC minutes coming at 2 p.m. Eastern, followed by President-elect Joe Biden's Thanksgiving address from Delaware later this afternoon. Then finally tomorrow, US markets closed Thursday for Thanksgiving. I know for all of you worldwide, it's been a tough year for you all, for some more than others. For those that can, please enjoy being with your loved ones through the next 24 hours and into the weekend, and spare a thought for those that can't. For you all, have a very happy Thanksgiving.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things, they're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things in life happens. You know, I'm here by myself.
So ¿dónde vive acá? En la parte de
This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became became something that's on t-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty.
The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends. But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start. And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world, yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC come to China, come to us, say,
You applied. 24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强调的硬件，强就强调的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Value-Ag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
In 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I've learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. And we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when you see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating. that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. spend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table, once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, it's time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同质互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick 2 weeks later.
12 in the morning, pop shells for a living and berry gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just everything about it, man. Just it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I just did sound check.
How was it?
It was tight. Hold it stick locks, but you been a bitch, suck a thick cock.
So Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. And it's just more entertaining. We just edit it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch.
This is the hardest nigga of all time.
You said when you come for a chigga like me. That was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for, independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell. What could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chigga. I want to touch him.
What do you guys think of Joji?
Oh my God!
That's my dad, son.
Did you guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said it feels like I've been released from prison. Do you want these, Mrs?
Definitely.
Definitely. Right.
Yeah.
And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's
Jade.
Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. have a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of them. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do. Was that? Good. It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. He's written it out bigger on the board. Thank you. Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures. Whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I could throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Mayron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本やったので、そういうことが演奏によって起こせる感じの、そういう器みたいな感じになってきて。初音ミクらしさって僕はあんまりない。逆に初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit.
And action!
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl, superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like,
Canada.
Is your daughter making videos? And I think my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, wear the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone.
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rusovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rusovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals, there's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was in his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner, and they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivasAChance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Dara, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera, that is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. Yes. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got as sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. that 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously, though, the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
an inevitable question. I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Yes, indeed. Live from my home in New Jersey, streaming on YouTube. It is Thanksgiving Eve, Wednesday, November 25th, 2020. And our focus right now is going to be Fed minutes. This is from the November 4th, 5th policy meeting. And we will be looking for any signs of changes when it comes to bond purchases. But gotta say, there isn't much action expected off of the news that we get from the Fed today. But as soon as they start crossing the Bloomberg terminal, we will bring them to you live, do some market analysis as well. In the meantime, let's get a check on the trading day. We got a lot going around, including a Bloomberg exclusive with the Treasury Secretary, Steven Mnuchin. So, Charlie, a lot to digest on this Wednesday.
Indeed, and let's begin there. Treasury Secretary Steven Mnuchin saying he has maintained close coordination with Fed Chair Jay Powell throughout the economic downturn sparked by the pandemic, and saying the central bank was aware in advance that he would bring an end to emergency facilities. The rotation out of tech shares and into cyclicals sparked by promising vaccine news reversed today as investors cast a wary eye on a batch of data that suggests a possible slowdown in economic growth. We've got the S&P retreating from yesterday's record, down now by 6 points, a drop there of just about 0.2%. The Dow is down 155, lower by 0.5. Nasdaq is up 46. That is a gain of 0.4%, while the Russell 2000 index, what a November, by the way, down now by 0.3%. 10-year up 2/32. 10-year yield 0.87%. Gold down 1/10 of 1%, $18.05 the ounce, and West Texas Intermediate crude up 2.5%, $46.05 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
What a November, what an October, what a September, Charlie Pellet. What a year it's been. All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Do you want to set the Business Week agenda? Keep in mind, Bloomberg Business Week and our Fed focus at this hour, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions that they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. And the Fed definitely in focus because we do have those Fed minutes crossing the Bloomberg. Again, it's from that November meeting. Let's set the Business Week agenda with our own Michael McKee, his international economics and policy correspondent at Bloomberg News, and he's joining us on the phone right now. You are on the phone, right?
I am on the phone.
Just checking because I know you are all over. You're a busy guy. So Fed minutes, first of all, were our expectations high here or not necessarily?
Expectations are not high. The meeting was 3 weeks ago, and we're still 3 weeks away from the next meeting. And so circumstances can and do change a lot. Certainly, we've seen a pickup in the COVID cases. At the last meeting, the Fed did not know that the Treasury Department was going to pull the funding for their special lending programs. At the last meeting, there was still, shall we say, a little bit of uncertainty about who won the presidential election. So there's not a whole lot in there. The first headlines that we get, and of course the Fed changed the way they release the minutes because of the pandemic. We now don't get them under embargo. The headlines come out as the reporters read them. And they're saying that circumstances could shift to warrant bond buying changes and that they should enhance their QE guidance fairly soon. So maybe that means either they announce a change in December or they announce that they might announce a change. We don't really know yet.
Well, it seems like more of the same, right, Mike? I mean, listen, the Fed is constantly watching what's going on in the economy, the current situation, and can say something, today, but it could certainly change tomorrow based on what's going on in the economy.
And we have to keep in mind that the Fed can't do a whole lot at this point. They can buy more QE and push down on the long end of the curve, but it's 75 to 85 basis points. You're not really having much of an impact if you're pushing 10s lower. And they can, do some other things to keep interest rates down, but they can't really do much else at this point. And now they're having even some of the lending taken away. So this matters, in a sense, to people on bond trading desks because they have to absorb this. Yeah. But to the general public, it isn't going to make any difference at all.
All right. So what does make a difference on this Wednesday, Thanksgiving Eve, Mike? I think in a day where our Bloomberg News team caught up with the U.S. Treasury Secretary in an exclusive. Anything out of that? Talked a lot about his relationship with Jay Powell of the Fed.
Yeah, there's been a lot of speculation that Mnuchin's decision to claw back money from the Fed lending programs and end them on December 31st was designed to make it more difficult for the incoming Biden administration to deal with the pandemic. And it looks like Mnuchin is pushing back a little bit on that, trying to fix his reputation some, and saying, that we didn't have a choice, that Congress meant us to end this on December 31st, so we had to do it. There is some dispute about that, but that is the Treasury Secretary's reading. And, of course, he did talk, to Jay Powell about it. We knew that because the Fed statement came out minutes after the Treasury statement. So the Fed was aware of this.
Yeah.
They have gotten along fine, and I don't think there's some sort of irreparable major breach between Fed and Treasury, but obviously with Janet Yellen coming in at Treasury, they'll grow even closer.
Well, and yeah, exactly, right? And she's going to be someone who certainly understands the situation. And you do wonder, Janet Yellen hits the ground running. Will she have everything in place that she needs to do what she needs to do to help out the economy from a Treasury's perspective quickly?
No, she won't, because these lending programs, the money, Mnuchin says he's going to put the money that he does get back from the Fed, which should be about $260 billion, back into the general fund, which means it has to be appropriated by Congress again. So the Biden administration would have to go to Congress and ask for a new version of the CARES Act, some sort of stimulus program. And who knows, given Mitch McConnell, whether they would get it or not. So. Yeah. She may be a little bit handicapped. The issue is whether they need it. We don't know yet.
Right, exactly. Well, you tell me, Mike, you parse through all of the economic statistics that we get. We got those weekly jobless claims numbers that we watch typically on a Thursday, but of course we got them Wednesday today because of the Thanksgiving holiday. What do they continue to tell us about the U.S. labor market?
Well, the jobless claims tell us the labor market is starting to hurt again, which is the story that we anecdotally have observed with states starting to close bars and restaurants early, gyms and theaters and things. The people who work in those businesses are now unemployed. So we expected the jobless claims numbers to go up, but not as fast or as far as they have. The other numbers we got today weren't bad. Durable goods orders up 1.3%. And so the manufacturing side of the economy is still going okay, but the consumer side might start to slow if people continue to lose their jobs and therefore paychecks.
Well, talk to me about the income and spending numbers, what your take was on those as well.
Well, the income numbers are a disappointment because obviously you can't spend if you don't have income. And so that's a little bit of a scary number. The spending numbers, we sort of expected something of a pullback. It was lower than the prior month, a little bit better than expectations. But the fact that people were still spending is relatively good news. And the question is, do they continue that this month? And what does the holiday season shopping look like?
Right, especially since a lot of the support systems that we know start to wrap up at the end of the year. Michael McKee, before you go, what's your favorite pie for Thanksgiving? I know we've talked about this in the past.
I'm an old English traditionalist, and I like mince pie, but hardly anybody likes that.
God, where do you even find it? Listen,
You
have a
make
great.
it.
All right. Fair enough. Have a great and safe Thanksgiving, Michael McKee. Always appreciated. International economics and policy correspondent at Bloomberg News. All right, coming up, we've got a jam-packed show on this Wednesday. We're going to check in with the CEO at Medable. It's a platform that connects patient sites and vaccine clinical trial teams. So we'll talk to her about what she is seeing and what kind of work is going on there. Favorite guest of mine, NYU Stern School of Business professor Scott Galloway. He's written several books. He's got a new book, Post-Corona From Crisis to Opportunity. I cannot wait to check in with him. Also, we've got a story about Google's deep pockets. We've got another one about 16 days to stave off a nuclear arms race. And if that didn't wake you up, how about our most read story on the Bloomberg? It's about a flat bonus pool on Wall Street. So wait, what? So we'll get to that. And then we've got Greg Greifeld. He's the head of credit over at Runway Growth Capital. So we'll talk about financing for late-stage growth companies and really the use of debt in all of that. And we're going to wrap up. I'm surrounded by wine bottles, so we're going to wrap up with some wine on this Thanksgiving Eve. We'll talk about that with the sales brand ambassador of 1821 Fine Wine and Spirits. Quick check on the bite of the day. One number that tells us a lot. It's 10,000. IBM planning to cut about 10,000 jobs in Europe. It's all as a move to cut costs as its slow growth services unit and get ready for a spinoff. All right, right now, let's get a check on world and national news. For that, it's over to Nancy Lyons. Hey, Nance.
Hey, Carol. Well, we are standing by for President-elect Joe Biden to give a Thanksgiving address. He's expected to ask Americans to continue following COVID-19 guidelines through the holiday. Well, Rudy Giuliani is in Pennsylvania this afternoon arguing before a legislative committee. The election in that state was a sham. He singled out Philadelphia and Allegheny County surrounding Pittsburgh. President Trump had intended to join Giuliani but canceled when one of his aides tested positive for coronavirus. Well, despite warnings from the CDC that Americans need to stay home this Thanksgiving, airlines say they're seeing an increase in air traffic. Daily numbers are up 16% from last week, according to the Transportation Security Administration. But it's unclear if the boost will be enough to carry the airlines through to the end of the pandemic, which may not arrive until next summer. George Ferguson is an airline analyst for Bloomberg Intelligence.
We think lots of carriers have put a decent amount of cash on their balance sheet to make it into summer 2021. If summer 2021 isn't good, you're going to see a lot more failures, and that obviously leads to layoffs and things like that.
The International Air Transport Association predicts airlines will need another $80 billion in government support. The annual Macy's Thanksgiving Day Parade in New York City will be different this year because of the pandemic. Executive producer Susan Tercero says TV viewers will not see crowds.
But they will see things that are very familiar to them, like the floats and the balloons, and those performances and everything passing in front of Macy's Herald Square at 34th Street.
And participants will be wearing masks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, appreciate that update. Carol Massler, along with Charlie Pellet here. Have you ever been in the parade? Somehow I feel like you would have been.
I have watched the parade very close up over the years, and what an experience it is. But good luck trying to find a bathroom.
Yeah, exactly. Plan ahead, everybody. All right, let's talk about some of the virus stories that we're seeing on the terminal today. Charlie, John Tozzi putting out a story. A growing number of hospitals around the U.S., they have canceled or delayed some planned medical procedures. Basically, it's all about preservation for staff of beds as we continue to see those surging COVID-19 numbers.
Indeed. The conditions, according to John's story, are especially acute in the Midwest and West, from Illinois to Idaho. Health systems limiting non-emergency surgeries as the pandemic strain on personnel grows. All of Wisconsin's major hospital systems said to be postponing, just as an example, some non-emergency care. Hospitals also working with regulators to add around 1,400 beds statewide. And it's an issue. Number one, are these beds that could be going to COVID patients? Issue number two, do you want to be in a hospital for elective surgery in the current environment?
Yeah, exactly. But, delaying some of these, either routine procedures or important to operations, whether it's replacing joints or removing tumors, obviously can have an impact on patients. And this is why I think, Charlie, you and I talk about it. It's the domino effect. More cases, more hospitalizations, strains on our healthcare system so that routine procedures are squeezed out. We're stressing and maxing out a healthcare system and individuals and professionals who are already pretty exhausted, still kind of reeling from the first wave. And so this is why we talk about, this is why the medical experts we talk to with, this is why the folks at Johns Hopkins talk to us about, social distancing, wear masks, do everything to protect your community.
And stay out of the hospital.
Yeah, exactly. No doubt about it. All right, folks. That's just one of the headlines that we are dealing with when it comes to COVID-19. Charlie Pellet, thank you so much. Appreciate it. You're listening to Bloomberg Business Week. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Federal Reserve officials discuss providing more guidance on their bond buying strategy during their November 4th, 5th policy meeting. According to meeting minutes published today by the Fed, quote, many participants judged that the committee might want to enhance its guidance for asset purchases fairly soon. The rotation out of technology shares and into cyclicals, sparked by promising vaccine news, reversed today as investors cast a wary eye on a batch of data that suggests a possible slowdown in economic growth. S&P retreating from a record, Dow Jones Industrial Average falling back below 30,000. Here's where we stand. The Dow is now lower by 192 points, a drop of 0.6%. S&P down 10, a drop there of 0.3%. Nasdaq up 36, a gain there of 0.3%. Nasdaq 100 index up by 0.4%, and the Russell 2000 is down 0.5%. 10-year yield 0.86%. We've got gold, little change, down 28 cents the ounce at $18.07. West Texas Intermediate crude surging 2%, now at $45.83 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. So Charlie and I touched upon some of the virus heads, Nancy Lyons. We know infection rates are accelerating in the Southwest and the Rocky Mountain West after sweeping through states in the Midwest. We talked about a growing number of hospitals canceling or delaying some planned medical procedures to preserve staff and beds. The death toll in U.S. nursing homes and long-term care facilities topping 100,000. And meantime, you've got U.S. airline traffic rising as some Americans traveled for Thanksgiving despite tons and tons of warnings from American health officials. Cases right now passing 59.8 million, deaths topping 1.4 million. So let's talk about the virus. Our daily check today with Dr. Michelle Longmire, CEO at Medable. It's a platform connecting patient sites and clinical trial teams, and she joins us on the phone in Palo Alto. Dr. Longmire, so nice to have you here with us. First of all, tell us a little bit about what you are seeing on the ground out there on the West Coast.
Sure. Well, thank you so much for having me today. I think everyone is talking about the risk mitigation strategies that are really needed for the holiday. Of course, everyone loves Thanksgiving. It's really a quintessential family holiday in the United States. And unfortunately this year, the best thing to do is to really, take the safety measures into consideration. And unfortunately, this means really not spending time with family in person, if they haven't been within the same quarantine group. So I think that's really front of mind for people in California. And we're just thinking about how we can look forward, to a vaccine, into an era where we can be back with our family and friends. But certainly people are thinking about the holiday, but with safety in mind.
Yeah, no, absolutely. And I know that your specialty is autoimmune skin diseases, but I do want to, before we get into the kind of work you guys are doing at your firm and your company, that specifically when you see the rising numbers of people who are traveling, airline traffic, does that say to you that in a couple of weeks we probably are going to look back at Thanksgiving as another super spreader event?
I mean, the data is the data, and we know that the social distancing, and we know that the masks, and we know that the isolation measures are critical. And this is a very contagious illness, and the probabilities are what they are. And if you defy those by crowded airplanes and public gatherings, we do see that the disease spreads. So it would be very it would be unlikely that we won't see that following the holiday, because people, if they are not heeding the warnings, we're going to see much greater numbers, and the spread is going to be there. So certainly, I think that's why everyone's preparing for that, because we're observing that people are still traveling, and the airplanes are certainly an area where we know that there is contagion risk.
Right. It's the antithesis of everything that everybody says, right? It's closed. It's lots of people. It's not an ideal situation. So talk to us a little bit about the work you guys are doing at Medable. You guys are a platform. You bring together patient sites and clinical trial teams. I have members of my family that are in the medical community, so I understand this whole idea, especially when there are therapies out there, finding people who might be good for a trial, which just helps in kind of learning to know more about a treatment. But tell me about what you guys are doing specifically when it comes to COVID-19.
Sure. So, clinical trials are a critical component of developing new medications. And I think it was an area people didn't really think about prior to COVID. But then once COVID hit, the role of the clinical trials for vaccine and therapy development became something that the broader public was aware of. And, you look at the news coming out of Pfizer and Moderna. Let's take Pfizer, for example. We've had over 40,000 volunteers into the Pfizer vaccine study. And these are people who, want to be a part of the research efforts, who also are eager to get the vaccination, and they've played a foundational role in us, getting through this pandemic. I think our role, Medable, in this is to tackle some of the biggest challenges facing clinical trials. And one of the biggest challenges is access. The pandemic has resulted in closures of many of, the general kind of day-to-day healthcare facilities, right? We don't want people going in there because we don't want to spread the disease.
Right.
And clinical trials in a traditional sense are no different than as you go to your doctor. What Medable's pioneering is really a way to access the clinical trial in the convenience of your own home. And this has become extremely important in the setting of the pandemic, and has become extremely important in these large vaccine trials, where we need the participation. People are eager to be a part of research, and we need to bring that into the comfort of their own home, through the various aspects of the clinical trial. So we've seen a big shift from clinic-based healthcare delivery and clinical trial delivery to much more of a remote, digital, and connected ecosystem, and our company's really been at the forefront of that transition and transformation.
That's fascinating to me, and we've just got about 40 seconds. We'll take a break and come back and talk some more, but how do you actually reach people, especially at a time when the healthcare system overall is pretty strained?
It's through our phones. It's the device we use every day, and that's really the conduit for accessing this care.
That's pretty amazing, and that certainly has then opened you up to people for specifically COVID and these trials, correct?
Absolutely. I mean, smartphone utilization is across the population, across age demographics. And through this device, you can be a part of a clinical trial.
All right. Listen, sit tight, Dr. Longmire. Sit tight for a second. We're going to do a little bit of news and then hopefully come back and continue this conversation. We're going to get back to Dr. Michelle Longmire. She's CEO at Medable. As I mentioned earlier, it's a platform connecting patient sites, clinical trial teams, and they certainly are doing that work right now amid the health pandemic. You are listening to Bloomberg Business Week. We are also awaiting President-elect Joe Biden, expected to make some comments, a Thanksgiving address to the American people. We will take you live to Wilmington, Delaware, as soon as he begins speaking. You're listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, this is Bloomberg Business Week. I'm Carol Master. We are awaiting some comments from President-elect Joe Biden. As soon as he begins speaking in Delaware, we will take you there. In the meantime, we're going to get back to our guest, the CEO at Medable, and what they are doing in terms of connecting patients, individuals with some of those clinical trials for a COVID vaccine. In the meantime, let's get a check on those top business stories. Let's get back to Charlie Pellet.
Thank you very much. And here's what's going on this Wednesday before a holiday. The S&P retreating from a record. The Dow Jones Industrial Average retreating back below 30,000. Tech-heavy Nasdaq indexes edging higher. Markets close tomorrow for Thanksgiving, leading to a deluge of data that brought the first back-to-back rise in weekly jobless claims since July. Here's where we stand. S&P lower now by 7, down 0.2%. The Dow down 178 points, down 0.6%. I mentioned the Nasdaq indexes. Right now, the composite index up 48 points, up 0.4%. Nasdaq 100 index up 62 points, up 0.5%. A retreat for the Russell 2000 index, lower now by 0.4%. 10-year up 2/30 seconds. 10-year yield 0.87%. Gold down 0.1%, lower by $1 the ounce at $18.06, and West Texas Intermediate crude up 1.6%, $45.63 a barrel. A growing number of hospitals around America have canceled or delayed some planned medical procedures to preserve staff and beds for a surging number of Americans sick with COVID-19. Conditions remain especially acute in the Midwest and West. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health, and she says it won't be until next spring that we start to see results from newly developed vaccines.
I think we're looking to see vaccine uptake be really the focus as we move towards distribution, and the states are already working on a plan, and with that I think we could start to see a much safer place for being out and about and reducing some of those restrictions by late spring, early summer of next year.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names making news this week and last, shares of AstraZeneca, the ADRs here in the U.S., they're down now by 2.3%. Pfizer down 0.6%. Moderna shares, they're up now by 9.4%. After earnings, keeping an eye on shares of Gap based in San Francisco. Shares are plunging now by 20.2%. Recapping, S&P down 8, a drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. I want to get back to our guest. We're speaking with Dr. Michelle Longmire, CEO at Medable. As I mentioned, it is a platform. It connects patients, sites, and clinical trial teams, and she is still with us on the phone from Palo Alto, California. You know, Dr. Longmire, one thing I want to ask you is, there you are, smack in Silicon Valley, and I do think about the healthcare world. It has been kind of stuck in time. And I do think COVID has definitely disrupted it, and people are embracing telemedicine like never before. We're looking at ways to do things. I've had medical things, and I've done more, checking in, logging in online than I've ever done before. Silicon Valley, what role can they play in kind of bringing our healthcare system to the 21st century? Is Dr. Longmire with us? Okay, we may have just had a little technical glitch, so hopefully we'll get back to her. But we are talking about some of the latest virus headlines, and specifically maybe how technology can kind of bring healthcare to the 21st century. In the meantime, do not forget, we are watching and waiting for President-elect Joe Biden. He is expected to deliver a Thanksgiving address to the American people in Wilmington, Delaware. It's been a big week for the president-elect in terms of finally getting the okay from the current administration to begin an official transition, which gives him access to a lot of what's going on in the government, which helps in terms of a transition to the next administration. So that's been key. He's also been, of course, outlining and sharing with the American public what his cabinet and key positions will look like. And we've talked about this on air. It's a lot of diversity. It's a lot of folks that were certainly well known to the Obama administration, also very key insiders for Joe Biden specifically. But it's also names that we know really well, like former Fed Chief Janet Yellen for Treasury Secretary. And of course, these individuals, to some extent, some of them have already been vetted, have gone through this process before. So the expectations are that that will kind of ease the process when they have to go before for Senate confirmation. So, we're just kind of getting more information about that. But it also gives us an indication of maybe what kind of focal points will be part of the new administration. Janet Yellen is known for her work on labor economics and the labor market. So we know our labor market, as we heard from Mike McKee, certainly in a tricky position specifically. John Kerry being appointed a special climate ambassador. So that is showing that's a new position, and certainly at least projecting that climate change and the climate impact will be a key pillar of the Biden administration. And of course, first and foremost, he's going to have to deal with COVID-19 and pick up where the Trump administration left off, certainly on a vaccine and elsewhere. Want to get back to our guest, Dr. Michelle Longmire, CEO at Medable, still with us from Palo Alto, California. We're a high-tech world, Dr. Longmire, but still, of course, technology doesn't always, it fails us occasionally. I asked, or I put out the question of, there you are, in Palo Alto, smack in the middle of Silicon Valley. Healthcare, we know, has been slow to change, slow to disrupt. But the virus has definitely made people do more telemedicine. We'd start to see some changes in the healthcare system. What role can and should Silicon Valley be playing even more so when it comes to kind of bringing healthcare to the 21st century?
Sure. I think that the pandemic is an unprecedented opportunity for Silicon Valley and technology to show the value around major changes. So, what we've seen is, say, telemedicine, utilization up by 5x of what it was before. This is, really important that as a tech industry, we're able to move quickly to use the window of opportunity to bring in these changes and to really, for us as a, clinical trial company, to serve patients in new ways as they're looking to connect to the healthcare system with new technologies.
No, and bringing it back to your company, just got about 40 seconds left here. I mean, the more patients that get involved in clinical trials, we ultimately, on the other side, figure out what treatments can best serve us as a population.
Absolutely. I mean, clinical trials are the route to us, achieving cures to 7,000 or more uncured diseases today. And they are a fundamental part of us developing new medication. So it's to the benefit of everyone. I'd encourage everyone, to consider clinical trials. It's super important for us as, we move forward with better health as a society, and certainly as we've seen with COVID-19.
All right. Listen, great to check in with you, and I'm glad we were able to reconnect. Be well. Have a great Thanksgiving. Dr. Michelle Longmire, she is CEO at Medable, and she is joining us on the phone from Palo Alto, California. So you are listening to Bloomberg Business Week. We are awaiting some comments from President-elect Joe Biden, and we will see whether or not we will get more information about his cabinet, but just also some of the key initiatives as he moves forward and heads towards the White House come January. So let's get another check on world and national news. Nancy Lyons, I know, also awaiting Mr. Biden.
That's right. Well, we are expecting President-elect Joe Biden to be giving a Thanksgiving address in just a few minutes. He's expected to acknowledge the sacrifices many Americans are making this year. As for Biden's personal plans for tomorrow, his aide Kate Benningfield says he and his running mate Kamala Harris are scaling back.
The president-elect and vice president-elect will be spending time with their respective families and do not have any scheduled in-person events.
We could be getting closer to a coronavirus vaccine with promising results from several trials. Moncef Slaoui leads the U.S. vaccine development for Operation Warp Speed. He joined CBS this morning to talk about a timeline for vaccine approval and distribution.
Within the first wave, we think there is about 110 million people. Those should be covered based on our plans between the month of December and the month of February. Now, the U.S. population as a whole should be covered in terms of vaccine doses available somewhere between the month of May and the month of December.
Slaoui says he has not yet met with President-elect Biden, but he plans to do that shortly. Meghan Markle says she suffered a miscarriage over the summer. Writing in the New York Times, the Duchess of Sussex says it happened while she was lifting her 18-month-old son Archie out of his crib. She says she's sharing her story to help break the silence around an all-too-common tragedy. And a major loss in the international soccer community. Legend Diego Maradona has died of an apparent heart attack. He was 60. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy Lyons, thank you so much. You are listening to Bloomberg Business Week. Carol Master joining me once again is the one and only Charlie Pellet. And check this out. You know, listen, we know the stories. You come to New York, you're young, you want to work there, you want to live there. It's so expensive. So you end up being like in a studio or one bedroom with like 3 roommates.
Exactly.
It's not ideal.
No, it isn't. And it's a fascinating story. New York City rent plunges, let budget-minded roommates finally live alone. It's a story written by our Oshrat Carmiel, and would love to give a little bit of credit to co-author Billy Joel.
I love you, Charlie. Yeah, little Billy Joel. Thank you so much. But yeah, right, you're saying, listen, roommate, I love you. Let's have dinner. Let's have a drink after the pandemic. But man, I'm tired of living with you, and I'm tired of sharing a studio with you.
Exactly, and here's what's going on. The rents are coming down. Studio apartments now at the lowest in nearly a decade, and you can say, you know what, this is just not working out. So roommate, I'm out of here.
Okay, so listen, perspective, and you and I always like to do this because I know when we start talking about numbers in the New York metro area, anybody else across the country who's listening on Bloomberg Radio are like, you guys are crazy. But in October, Manhattan studio rents tumbling 17% from a year earlier to a median of $2,245. Yes, still sounds like a lot, but it's low for New York Metro and New York City specifically. Lowest since 2011 data from appraiser Miller Samuel and Douglas Elliman.
And yet, though, Carol, I know our listeners in San Francisco are listening to this and saying, hey, that's a bargain. Where can I snap up a studio for that kind of rent? Because, you know, we talk about Manhattan, we talk about New York City. Truth of the matter is, yes, you can find low rents around New York City depending on where you're willing to live, where you're willing to travel to. But, you know, San Francisco's been grappling with high rents for decades.
Right, and there's stories of people even negotiating that median rent down even hundreds of dollars more, or the landlord paying some of the closing, paying some of the fees, involved in the process. So because, listen, we know that there's a lot of vacancies and landlords are looking to fill up some of those apartments. All right, Charlie Pellet, thank you so much. You're listening.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a mixed Wednesday ahead of a holiday tomorrow with the S&P retreating from yesterday's record. The Dow Jones Industrial Average back below 30,000, 29,834 right now on the Dow. Dow Industrials down 210 points, a drop now of 0.7%. S&P is down 10, a drop of 0.3%. Nasdaq up 46, a gain of 0.4%. 10-year yield 0.87%. We've got gold down 0.1%, 18.06 the ounce, and crude rallying back above $45 a barrel, 45.49 now on WTI, up by 1.3%. Recapping, S&P down 10, drop of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So much. So you are listening to Bloomberg Business Week. I'm Carol Masser. We continue to learn every day about the power of social media companies such as Google and others. And this story reported for Bloomberg Business Week really plays into that big time. It's how Google's deep pockets really make some of its rivals less eager for an antitrust crackdown. You're probably saying, wait, what? So let's get into this with our own Bloomberg Business Week editor, Joel Weber. He's joining us on the Access line in Brooklyn. This story written by Mark Bergen, who is technology reporter at Bloomberg News. But Joel, let me kick it off with you first. I mean, this is a story that I feel like, we continue to see some of these big social media players, big, tech players, they just continue to dominate. And some of it is because of some of these relationships they have with even some of their smaller competitors.
Yeah, that's what makes this story, I think, part of an interesting antitrust conversation, and an element that I hadn't heard before, and part of that is Google has really just an amazing monetization ability, and as part of that, they are not shy about throwing their cash around, and a lot of that cash goes to we'll call them rivals, even though that you might not totally always think of them as rivals.
Right.
But in this case, and the one that I'd love to have Mark talk more about, Mozilla, which has a rival product in its Firefox browser, actually makes a lot of money from Google, even though Google has a rival product in Chrome. So Mark, talk to us about how Mozilla and Firefox sort of see this relationship with Google in light of the antitrust conversation that we're in the middle of.
Yeah, sure. I think there's like two different versions, right? There's the front-facing sort of official version, which is we have Mozilla in the story saying, it's interesting that they actually switched to Yahoo in 2014 because Yahoo was willing to give them a lump sum, from my understanding, even like $100 million more a year than Google, which is great from Mozilla's standpoint to have that much more money. But then a lot of their Firefox users just started switching over to Google. And so by their telling, officially, a lot of people just prefer Google search over alternatives. You talk to sort of privately with a lot of people that work there, and they're like diehard privacy advocates, right? And they're kind of, some of them are disturbed or upset about some of Google's privacy practices. And so it's as much as they want to push on Google for Chrome, and they have done some marketing, and they came out with a great billboard a few years ago that said "Big Browser is watching you." They're well aware that they're sort of like poking the bear, and they're actually kind of targeting who is their biggest bankroller. So it's a very awkward, I think, kind of unique position for the company to be in that many other Google partners are also in.
Right, and so that kind of brings us to the antitrust context. So how would like a regulator look at an arrangement like this and try and make sense of it?
I mean, Mozilla's come out and publicly, and I think mostly we expect them to privately to say the DOJ is coming after these search deals that Google has, where they pay up front for distribution of the search engine. That seems to be something where you're going to see a lot of companies that wouldn't maybe normally come out in support of that now arguing, please don't make those illegal because they're really important for our bottom line. So I don't know how the DOJ is going to land on that. You certainly like the Apple-Google relationship is a really fascinating one.
Well, get into that one. That's the one that blew my mind in your story because they really benefit from each other.
It's a great mutual benefit. I mean, Google always talks about how it has a horizontal business, right? And so much of their advertising, right? They're sharing revenue with publishers. They're sharing with websites and YouTube, right? It's all the same sort of model. And with Android, right? Every single Samsung gets a lump of change every year from the Google searches on Samsung, and Apple gets the same deal, although it is a much more secretive deal. There are very few people at both companies that know the details of that. As we reported, Apple had talked to Microsoft and Bing a few years ago. I think that really scared Google because they get so much revenue from iPhones.
Mark, can we talk about like Mozilla specifically, and like how much do they get in cash, cold hard cash from Google, and how significant is that to their bottom line?
Yeah, so Mozilla is a nonprofit. It's a private company owned by a nonprofit, so they put out numbers. The last numbers from I think was 2018, where they don't give the exact figures. They have a line item that says from Google, but they have royalties, and the royalties were close to they said about 90% of the royalties, I believe, in 2018 is over $400 million a year in revenue, and a bulk of that comes from these search deals. And so based on our sourcing, that's like about 80%. Probably minimum of that of their entire revenue comes. So this is close to half a billion dollars a year.
It's amazing. So you also mentioned that and you mentioned this earlier, the privacy element. And one of the things that you sort of had explored or was explored in the story is that there was actually a kind of a nascent ability to sort of jump into the search game. Oh, you're going to cut me off for Joe Biden, aren't you?
I love you dearly. Happy Thanksgiving, but we do have to go to the president-elect. Let's go to Delaware, everyone.
Thanksgiving, authorized by the Continental Congress, took place on December 18th, 1777. It was celebrated by General George Washington and his troops at Gulf Mills on the way to Valley Forge. And it took place under extremely harsh conditions and deprivation, lacking food, clothing, shelter. They were preparing to ride out a long, hard winter. And today, you can find a plaque in Gulf Mills marking that moment. Here's what the plaque reads. It says, "This Thanksgiving, in spite of the suffering, showed the reverence and character that was forging the soul of a nation." Forging the soul of a nation. Faith, courage, sacrifice, service to country, service to each other, and gratitude even in the face of suffering have long been part of what Thanksgiving means in America. Looking back over our history, you see that it's been in the most difficult circumstances that the soul of our nation has been forged. And now we find ourselves again facing a long, hard winter. We fought a nearly year-long battle with a virus that has devastated this nation. It's brought us pain and loss and frustration. And it's cost so many lives. 260,000 Americans and counting. It's divided us, angered us, set us against one another. I know the country has grown weary of the fight. We need to remember we're at war with a virus, not with one another, not with each other. This is the moment where we need to steel our spines, redouble our efforts, and recommit ourselves to the fight. Let's remember, we're all in this together. Sounds trite to say it, but we're all in this together. For so many of us, it's hard to hear this fight isn't over. We still have months of this battle ahead of us. For those who have lost a loved one, I know that this time of year can be especially difficult. Believe me, I know. I remember that first Thanksgiving, the empty chair, the silence, takes your breath away. It's really hard to care. It's hard to give thanks. It's hard to even think of looking forward. And it's so hard to hope. I understand. I'll be thinking and praying for each and every one of you at this Thanksgiving. at your Thanksgiving table because we've been there. This year we're asking Americans to forego so many of the traditions that we've long made this holiday, which made it so special. For our families, for 40-some years, we've had a tradition of traveling over Thanksgiving. Tradition that we've kept every year save one. The year our son Bo died. But this year, we'll be staying home. We've always had the big family gatherings at Thanksgiving. Kids, grandkids, aunts, uncles, brothers, sisters, and more. For the Bidens, the days around Thanksgiving have always been a time to remember all we had to be grateful for, and a time to begin to think about Christmas and begin even to do the Christmas list. But this year, because we care so much for each other, we're going to be having a separate Thanksgiving. For Jill and I, we'll be at our home in Delaware with our daughter and our son-in-law. The rest of the family will be doing the same thing in small groups. So I know how hard it is to forego family traditions. But it's so very important. Our country is in the middle of a dramatic spike in cases. We're now averaging 160,000 new cases a day. And no one will be surprised if we hit 200,000 cases in a single day. Many local health systems are at risk of being overwhelmed. That's the plain and simple truth. Nothing made up, it's real. And I believe you always deserve to hear the truth from your president. We have to try to slow the growth of this virus. We owe it to the doctors and the nurses and other frontline workers, care workers, who've risked their lives, some lost their lives, put so much on the line in a heroic battle in this virus against it for so long. You know, we owe that to our fellow citizens who need access to hospital beds and care to fight this disease. We owe it to one another. It's literally our patriotic duty as Americans. It means wearing a mask, keeping social distancing, limiting the size of any group we're in. Until we have a vaccine, these are the most effective tools to combat the virus. Starting on day one of my presidency, we will take steps that will change the course of this disease. More testing will find people with cases and get them away from one another, slowing the number of infections. More protective gear for businesses and our schools to do the same, reducing the number of cases. Clear guidance will get more businesses and more schools open. We all have a role to play in beating this crisis. The federal government has vast powers to combat the virus. And I commit to you, I will use all of those powers to lead a national coordinated response. But the federal government can't do this alone. Each of us has a responsibility in our own lives to do what we can do to slow the virus. Every decision we make matters. Every decision we make can save lives. None of these steps we're asking people to take are political statements. Every one of them is based on science, real science. Now, the good news is there has been significant record-breaking progress made recently in developing a vaccine. And several of these vaccines look extraordinarily effective. And it happens that we're on track for the first immunization to begin by late December, early January. Then we'll need to put in place a distribution plan to get the entire country immunized as soon as possible, which we will do, but it's going to take time. I'm hoping the news of the vaccine will serve as an incentive to every American to take these simple steps to get control of the virus. There's real hope, tangible hope. So hang on. Don't let yourself surrender to the fatigue, which I understand it is real fatigue. I know we can and we will beat this virus. America's not going to lose this war. We'll get our lives back. Life is going to return to normal, I promise you. This will happen. This will not last forever. So yes, it's been a really hard year, particularly hard for over 250,000 people and their families. But I still believe we have much to be thankful for. There's so much to hope for, much to build on, much to dream of. Here's the America I see, and I believe it's the America you see as well. America that faces facts, an America that overcomes challenges, an America that where we seek justice and equality for all people, an America that holds fast to the conviction that out of pain comes possibility, out of frustration comes progress, and out of division, unity. You all know in our finest hours, that's who we've always been, and that's who we shall be again. For I believe that this grim season of division, demonization, is going to give way to a year of light and of unity. Why do I think so? Because America is a nation not of adversaries, but of neighbors, not of limitations, but of possibilities. Not of dreams deferred, but of dreams realized. I've said many times that this is a great country. We are a good people. This is the United States of America. And there's never been anything we've been unable to do when we've done it together. Think of what we come through as a nation. How many things we've come through? Centuries of human enslavement, cataclysmic civil war, exclusion of women from the battle box, world wars, Jim Crow, the long twilight struggle against Soviet tyranny that could have ended not in the fall of the Berlin Wall, but in nuclear Armageddon. Look, I'm not naive. I know that history is just that, history. But to know what came before, what come before, what's happened before, can help arm us against despair. Knowing that previous generations got through the same universal human challenges that we face. The tension between selfishness and generosity, between fear and hope, between division and unity. And what was it that brought the reality of America into closer alignment with the promise of reality, justice, and prosperity? Sounds corny, but it was love, plain and simple. Love of country. Love of one another. We don't talk much about love in our politics. The political arena is too loud, too angry, too heated. To love our neighbor as ourselves is a radical act. It is what we're called to do. We must try. For only in trying, only in listening, only in seeing ourselves as bound together in what Dr. King called the mutual garment of destiny, can we rise above divisions and truly heal. Look, we all know America's never been perfect, but we've always tried to fulfill the aspiration of the Declaration of Independence, that all people are created equal, created in the image of God, and we've always sought to form a more perfect union. What should we give thanks for this season? Well, first, let's be thankful for democracy itself. In this last election, the one that just took place, we've seen record numbers of Americans exercise their most sacred right, that of the vote, to register their will at the ballot box. Think about that. In the middle of a pandemic, more people voted this year than have ever voted in the history of the United States of America. Over 150 million people cast a ballot. Simply extraordinary. Many of them waiting in line 5, 6, 7, 8 hours to vote. If you want to know what beats deep in the heart of America, it's this: democracy. The right to determine our lives, our government, and our leaders. The right to be heard. Our democracy was tested this year. And what we learned is this: The people of this nation are up to the task. In America, we have full and fair and free elections. And then we honor the results. The people of this nation and the laws of the land won't stand for anything else. Through the vote, the noblest instrument of nonviolent protest ever conceived, we remained anew and were reminded anew that progress is possible, that we the people, have the power to change what Jefferson called the course of human events. And with our hearts and our hands and our voices, today we can be better than yesterday. And tomorrow we can be still better than that day. You know, we should be thankful, too, that America is a covenant, an unfolding story. That we have what we need to create prosperity, opportunity, and justice. Americans have grit and generosity, a capacity for greatness, and reservoirs of goodness. We have what it takes. Now we have to act. This is our moment, ours together, to write a newer, bolder, more compassionate chapter in the life of the nation. The work ahead is not going to be easy. It will not be quick. You want solutions, not shouting. Reason, not hyperpartisanship. Light, not heat. You want us to hear one another again, see one another again, respect one another again. You want Democrats and Republicans and independents to come together and work together. And that, my friends, is what I'm determined to do. Americans dream big. As hard as it may seem this Thanksgiving, we're going to dream big again. Our future is bright. The fact I've never been more optimistic about the future of America than I am right now. I honest to God believe the 21st century is going to be an American century. We're going to build an economy that leads the world. We're going to lead the world by the power of our example, not just the example of our power. We're going to lead the world on climate and save this planet. We're going to find cures for cancer and Alzheimer's and diabetes. I promise you. We're going to finally root out systemic racism in this country. And this Thanksgiving, in anticipation of all the Thanksgivings to come, let's dream again. Let's commit ourselves to thinking not only of ourselves, but of others as well. For if we care for one another, if we open our arms rather than brandishing our fist, we can, with the help of God, heal. And if we do, and I'm sure we can proclaim the psalmist, with the psalmist who wrote these following words. The Lord is my strength and my shield, and with my song I give thanks to him. I give thanks now for you, for the trust you've placed in me. Together, we'll lift our voices in the coming months and years, and our song shall be of lives saved, breaches repaired, a nation made whole again. Folks, from the Biden family to yours, wherever and however you may be celebrated, we wish you a happy Thanksgiving. May God bless you, and may God protect our troops. Happy Thanksgiving.
All right, you've been listening to President-elect Joe Biden delivering a Thanksgiving address in Wilmington, Delaware, to the American people, talking about shared sacrifices that Americans are making, need to be making, including his own family this holiday season, and saying that we can indeed and will get through this current crisis together. Once again, stressing what we've heard from so many members of the medical community, that it will be time until we immunize all Americans with a COVID-19 vaccine. And in the meantime, social distancing, wearing masks and thinking about your community are key in order to all of us getting through the COVID-19 pandemic. He said as soon as he hits the ground running come January, that there will be a national coordinated response, but again, stressing that the federal government cannot do this alone, but does plan and anticipate more testing, more protective gear for schools and businesses once he is in the White House, and clear guidance to allow more businesses and schools open. In the meantime, though, the president-elect saying America finds itself facing a long, hard winter. You are listening to Bloomberg Business Week. I'm Carol Masser. So with that in mind, a lot really caught my attention reading in on this Thanksgiving Eve. And I got to say, when Peter Coy writes something, it definitely is something that I consider a must read. And this story in particular that caught my attention this morning was about how President-elect Joe Biden may have about 16 days to stave off a nuclear arms race. It's, a pretty heavy issue. So let's get into it. Peter is Bloomberg Business Week economics editor, and Peter joins us on the phone in New Jersey. Peter, thanks for standing by as we listen to the president-elect. Tell us about your story that's on the Bloomberg terminal today.
Right. Well, thanks for having me on, Carol.
Yeah.
The reference of 16 days is to the inauguration on January 20th, followed by the expiration of the New START treaty on February 5th. New START is the last bilateral nuclear arms control treaty between the U.S. and Russia. It's coming up for renewal, and the Trump administration has failed to work out an agreement with Russia. So they still could. It's possible that they'll pull something off in the next couple of months, but if not, that treaty would expire. So that you would assume that the Biden administration would have to put a very high priority on getting something done in those first 16 of the famous 100 days.
Right. It's just a reminder that he's going to have a pretty full plate, right? Dealing
Yes.
with the virus, dealing with the economy, dealing with the labor market, dealing with, global issues like START. I mean, what's the history of START? Remind us about that.
Well, we had this SALT. Old-timers remember SALT, Strategic Arms Limitation Talks, and then there was START, which was Strategic Arms Reduction Talks, and then in 2011 we got New START, and again it's just between the two countries, the U.S. and Russia, and it puts a cap on the number of warheads that each country can deploy, both warheads and the number of long-range delivery vehicles. So the U.S. accuses Russia of the U.S. would acknowledge that Russia is complying with the main provisions, but they want stronger verification provisions, and they want the treaty to expand to cover other types of nukes, intermediate range and so on, short range, as well as new delivery vehicles such as hypersonic glide vehicles. These are very scary things that travel many times the speed of sound. So that's the goal. But Biden would never be able to negotiate a brand new treaty in 16 days. So the idea would be, look, let's just give a one-year extension on this, and then we'll see where we go from there.
Well, and it's interesting because the Trump administration, from what I understand, they've wanted to broaden this treaty, right, to cover Russian nukes, and I think also to cover China. Is that correct?
Well, yes, they did. That would be extremely ambitious. And also, it's beyond anything that Russia could deliver. You can't complain to Russia that China's not joining your treaty. So it's kind of a stretch to start with, and it seems like definitely there's strong reasons to want to get controls on Chinese nukes, but trying to do it through the mechanism of a New START is probably the wrong approach.
Peter, I'm just thinking about all the conversations that were recently at the Bloomberg New Economy Forum, and we talked about, and you study these kinds of things, I mean, the billions and trillions of dollars that are still spent on nuclear weapons and having some kind of nuclear strategy, realistically in the hopes that nobody ever uses them, and yet here we are. And I do think about that money better spent and what it could do for our global economy.
Well, yeah, and that's one of the reasons this is an economic story. It's an economic story partly because if there were a nuclear war, we wouldn't have an economy.
Right.
But as you said, this is fantastically wasteful just on the face of it. I mean, your goal when you spend trillions of dollars on the military is that it all entirely go to waste, right? Because that means you succeeded in not having a war.
Exactly.
So, I mean, that just doesn't make sense. You'd much rather find a way to de-escalate, and nuclear arms races don't benefit anyone. So if Biden could possibly keep a lid on this, that'd be a nice way to start off his administration.
Hey, since I've got you, and I feel lucky that we do, I haven't had a chance to talk to you about Janet Yellen as Treasury Secretary in a Biden administration. I just would love to have you weigh in terms of what's going to be her toughest task, and what will be key for her in that position if indeed she gets confirmed.
She'll be facing the same issues that the current administration is facing. We've got to get a new coronavirus relief package in place. That she'd be crucial a voice in that. It'll be fascinating to see how Treasury and the Fed cooperate under Biden, because we'll have past Fed chair with current Fed chair know each other very well, work together, and see mostly eye to eye. So I would say there's a much better chance that the Yellen be a voice for fiscal stimulus, which is exactly what Jay Powell, the current Fed chair, has been asking for. He's saying the Fed can't do it alone. The Treasury needs to step up and help as well.
Yeah, well, if anybody understands what the Fed can do and what their responsibilities are, it's certainly Janet Yellen. So you do think that will be a really, really smart bridge in all of this. Thank you so much, Peter. Have a great Thanksgiving, a safe Thanksgiving. Peter Coy, check him out on Twitter and also on the Bloomberg and at Bloomberg.com. He is economics editor for Bloomberg Business Week. Okay, right now we do want to get another check on your top business headlines, get another check and update on the trading day. Here's once again Charlie Pellet.
Thank you very much. Tech investors giving thanks. 41 minutes to go ahead of the closing bell. 41 minutes to go until the Thanksgiving break for a lot of people. The rotation out of tech shares and into cyclicals sparked by promising vaccine news reversed today as investors cast a wary eye on a batch of data that suggests a possible slowdown in economic growth. S&P 500 index retreating from a record. Dow Jones Industrial Average falling back below 30,000, 29,882 right now on the Dow. It is down 165 points, lower by 0.6%. The S&P down 4, little change, down by about 0.1%, but certainly a lot of interest in tech stocks today. Nasdaq down up 64 points. Nasdaq now at 12,110. Green on the screen for Nasdaq, up 0.5%. The Nasdaq 100 index pushing higher by 0.6%. Russell 2000 moving lower, down 0.3%. 10-year yield 0.87%. Gold little changed, up 94 cents the ounce at 18.08. West Texas Intermediate crude up 1.6%, 45.61 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Great stuff as always. Thank you so much, Charlie Pellet. You are listening to Bloomberg Business Week. Bloomberg Green. It is brought to you by PGIM, the investment management business of Prudential, committed to better outcomes for ESG investments. Join the pursuit of outperformance at PGIM. Learn more at pgim.com. So I do want to get to our Bloomberg Green segment, because changing times based on the changing political winds, that story in our Bloomberg Green segment today, really about how today's smart money is staying away from Arctic oil drilling. Let's get into it with Bloomberg News environmental regulations reporter Jennifer Deloe. She is with us on the phone from the nation's capital. Hey, Jen, nice to have you here with us. So we're talking about drilling rights and selling those drilling rights. That's something the Trump administration has been pretty aggressive about doing.
Absolutely. They were part of a push several years ago to get Congress to basically mandate that they stand up a drilling program in the Arctic as part of the tax cut bill in 2017. And now they're taking really concrete steps to try to get drilling rights sold really in the final days and maybe even hours of the Trump presidency. We could see a lease sale January 19th, trying to basically get these drilling rights out the door.
And folks are lining up for them, correct? A little sarcasm. Well, listen, I feel like this speaks to so many conversations we have on Bloomberg that, right, you can put it out there, but the winds have changed, especially when it comes to things like this and the impact on the climate and kind of where the energy markets are going.
That's exactly right. I mean, we see the same thing in the market, with coal and natural gas and in the electricity market. And here, it's just remarkable. Had this sale happened even a year ago, you'd have probably seen much more interest, much more activity, including some bigger names. And the reality is that oil companies are facing, not just the reality of a Biden administration that has promised to block Arctic drilling. So these leases are really going to be worthless for 4 years at least. But they're also seeing, financing dry up for these projects. And the PR, hit that they would take from drilling in the Arctic, which is wildly unpopular, is a significant factor too. A year ago, some of these considerations were not at play.
Jen, you know what I think really, that was, I thought, interesting, that anybody who bids on these drilling rights, as you say in your reporting, will need outside financing. And again, as you said, the PR image, there are a lot of banks who are like, thanks, but no thanks, because increasingly we're seeing among the big investors, institutional investors, they are looking at the investments, the loans that a bank makes, right? The business that it transacts in terms of how it fits into increasingly ESG criteria.
Well, that's exactly right. I mean, we've seen 5 major U.S. banks adopt policies saying that they are not going to finance oil and gas projects in the Arctic refuge. And they're saying, that they're adopting these policies not because they're, just being pressured by environmentalists, which is something you hear from the Trump administration. But in fact, there are real financial risks involved. They've already taken hits with their oil investments. And of course, they're concerned about risks to the climate, to their investments and their reputation if they keep underwriting these projects.
So what happens, though, if somebody does buy a lease before the Biden administration steps in? It's real, right? And it can lead to drilling?
In fact, it can. So these leases, if they are formally, not just sold, but actually formally issued before Biden is inaugurated, they're 10-year contracts, and it's really hard to get out of a contract and would be really hard for the Biden administration to walk away from them. The reality is every single permit these companies would need to actually do something with those leases is not going to come in the next 4 years. I mean, we're talking about drilling permits, but also various environmental approvals and wildlife approvals. So all of those are an obstacle to actually standing up activity in the next 4 years. One thing that's going to be interesting to see is really who shows up. We won't have big names, but we could see some speculators and little-known companies that have ties with Alaska interests that want to see this area developed.
Yeah, it's a fascinating story and a deep dive into what's going on. As everything else is going on around us, we've got to keep a watch on these kinds of things. Jen, thank you so much. Jennifer Deloe, she is environmental regulations reporter for us here at Bloomberg News in our Bloomberg Green segment today. Check her out on Twitter, and you can check her out on the Bloomberg Terminal and also at Bloomberg.com. You're listening to Bloomberg Business Week. Coming up, we're going to get into one of the most read stories. In fact, I think it's the most read story on the Bloomberg. It has to do with bonuses. You're listening to Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Masser right here on Bloomberg Radio. It is our number one story on the terminal in the past 8 hours. Has to do with a flat bonus pool. Wait, what? So we're going to get into that story in just a moment. First up, though, let's get back to your top stories. Check on that trading day. Right, we put bonus in a headline, Charlie Pellet. Everybody reads it.
That's all it takes, and here's what's going on. We've got the Dow, the S&P retreating from a record. Going to be very interesting to see what happens in the next 29 minutes. We've got a holiday tomorrow for a lot of people. U.S. markets will be closed right now. The S&P 500 index trading almost flat. It is down by just about 2 points now, down less than 0.1%. The Dow is down 151, down 0.5%. Nasdaq keeps on going, looking at a possible record close. They're up 73 points now, higher by 0.6%. To put the loss for both the Dow and the S&P in context, they are pulling back from yesterday's records. The rotation out of tech shares and into cyclicals, sparked by promising vaccine news, reversed today as investors cast a wary eye on a lot of data that suggests a possible slowdown in economic growth. We've got the 10-year yield 0.88%. Gold is down 0.1%, now $18.06 the ounce, and West Texas Intermediate crude up 1.6%, now at $45.64 a barrel. A growing number of hospitals around the U.S. have canceled or delayed some planned medical procedures to preserve staff beds for a surging number of Americans sick with COVID-19. And lots of people are on the move today, making their way home to friends and family for Thanksgiving Day amid warnings about an uptick in cases. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
Travel is still high. We're seeing airline data showing that people are definitely still traveling. People are coming home. Kids are coming home from colleges. Kids are coming home from primary and grade schools. And so there's going to be new mixing in these populations that we haven't seen otherwise. So we are expecting the cases to definitely tick up, and we're hoping that people are as careful as possible when they make their holiday choices.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies, taking a look at some of the vaccine shares. AZN, that's AstraZeneca, the ADR is traded here in the U.S. They're down today by 2%. We've got Pfizer shares lower by 0.3%. Moderna is up today, surging 10.3%. Briefly, earnings news, Gap plunging now by 20%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. So just scanning my Bloomberg terminal, and yeah, this is the most read story in the past 8 hours on the Bloomberg, and kind of, feeling a little bit chilly across Wall Street. This story is about Bank of America's leaders, how they are planning year-end bonuses that break with Wall Street's traders' hopes for hefty raises. It's kind of odd considering they've had a bit of a record-setting run. So let's explain what's going on. Michelle Davis, finance reporter at Bloomberg News. She's with us once again on the phone from Vermont. Michelle, good to have you here with us. You know, you put bonus in a headline, and it's going to trend high on the Bloomberg. What's going on here?
Yeah, so, as you mentioned, Bank of America's senior executives have been floating plans right now about, what bonuses are going to look like. It's that time of year, and a lot of people in the industry, traders, have been expecting to get big payouts because trading revenue has surged this year. It's been one of the best years in a decade or since the financial crisis. Some people feel like they've worked harder than they ever have before. And the color we're getting is that execs are actually thinking about keeping the bonus pool flat for traders, even though, trading revenue jumped 20% in the first 9 months of the year. And a lot of this has to do with the fact that, Bank of America, while it has Wall Street operations, also has a big consumer bank that hasn't been performing as well over the past few months. This, matches what other banks have also been dealing with. And so, banks have had to put up a ton of money, billions of dollars, to cover potential loan losses on the consumer side of their businesses. And so in preparation for that, they're having to temper expectations about bonuses on the Wall Street side to try to, steady the ship before
Right.
a possible uncertain 2021.
Right. And some would say, listen, that's executives, the C-suite being responsible and looking at the whole business and saying, okay, what do we need to do to make sure 1 year from now we're in pretty good shape, right? Because we still don't have a lot of visibility about next year. And so some of them would say, or some would argue, right, that it's top brass being responsible.
Exactly. And, it's a pretty big deal because, as we've been talking about, this year, the 5 biggest U.S. investment banks, they're on pace to generate almost $100 billion in trading revenue for the first time in more than 10 years. And if Bank of America comes out and says, bonuses are probably going to be flat, all the other banks, they pay close attention to, not only surveys about compensation, but also what competitors are doing, because no one wants to be the one paying the least, but they also don't want to be, the entity that's handing out big wads of cash when they could get away with,
right.
Paying less. And so Bank of America coming out, this story could give others cover to pay less than what they would have paid. And all of this kind of, I guess, based on what we know from surveys, there's a compensation consultant, Johnson Associates. It's a compensation consultant. Earlier this month, they projected that equity traders, could see bonuses jump by 25%. Bond traders could see them increase by 45% or more. If one of the biggest Wall Street banks is going to keep it flat, then maybe the survey wasn't totally right. But we still don't know. There's still a month left in the quarter. In the fourth quarter, things could change. But yeah.
Well, and I think it's a key point about Bank of America, right? Because they've got a big consumer side. And I have to say, anecdotally, I know people who've been reaching out to some of the big banks for either home equity loans or so on. And what they're hearing is that they're not doing any kind of new loans. So they're being a lot more conservative going forward. And you do wonder what that means about what they're seeing internally, maybe on the consumer side of the business. I'm not saying B of A specifically, but just in general, that's what I've been hearing. So I don't know, I'm thinking about an individual. Can they lobby for a larger payout? How does this work? And just got about 40 seconds here.
Yeah, so what we understand is that not all of this is set in stone just yet. If there are high performers who, did really well, there's still time for executives to lobby for larger payouts for them. But I think that the other big thing to keep in mind here for Bank of America is there's a lot of optics here. The economy is struggling, businesses are shuttering, people are losing their jobs.
Yeah.
Brian Moynihan, the CEO, he recognizes that it probably doesn't look great to be handing out huge checks to, traders at a time like this. And so that's definitely something that's going to be coloring any decision.
Yeah, and safe to say that's left over from the financial crisis, right? We saw a lot of sensitivity in terms of what the big banks were doing, what Wall Street was doing, certainly at the time of the financial crisis, and having to kind of either force it, rein it in because the regulators are just trying to not be tone deaf amid a really, really tough time. Listen, thanks so much. Michelle, thank you. Have a great Thanksgiving. Michelle Davis, she's finance reporter at Bloomberg News, joining us on the phone in Vermont. All right, I do want to get back to world and national news. Lots going on. Let's toss things over to Nancy Lyons in our 99.1 newsroom in the nation's capital. Hi, Nancy.
Hey, Carol. President-elect Joe Biden is acknowledging the sacrifices Americans are making this Thanksgiving. He gave a special address this afternoon in Wilmington, Delaware.
I know how hard it is to forego family traditions, but it's so very important. Our country is in the middle of a dramatic spike in cases. We're now averaging 160,000 new cases a day.
He's asking all Americans to hang on. A vaccine is just around the corner. Biden says his family is foregoing the annual Thanksgiving trip to be with family. He says he'll celebrate the holiday at home in Delaware with his wife and his daughter's family. President Trump continues to insist he won the election. Today he spoke by phone to a group of Republicans in Pennsylvania.
This election has to be turned around because we won Pennsylvania by a lot, and we won all of these swing states by a lot.
State election officials and international observers, though, have insisted there is no evidence of widespread voter fraud, and Trump's legal team has repeatedly lost its cases in court. The president had expected to be there in person, but canceled when another aide tested positive for the coronavirus. The Supreme Court says it will continue to hear arguments by phone through at least January because of the pandemic. The court's announcement extends telephone arguments by a month. The court said it would closely monitor public health guidance in determining plans for the February 2021 argument session. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, really appreciate that update. You are listening to Bloomberg Business Week on this Wednesday, November 25th. I'm Carol Massar along with Charlie Pellet. So this story on the Bloomberg, and I feel like we're in an interesting time when it comes to the market environment, right, Charlie? We saw records yesterday on the Dow and the S&P. We talk constantly about the disconnect between Wall Street and Main Street. And investors, if you talk to some of the world's biggest investors, according to our team at Bloomberg, in terms of how they see the end of the global pandemic and then how to play it from an investment perspective, you get some different stories.
I tried to find a song that had global fund giants in it, but it wasn't happening, And this story here, written by Bloomberg News, talks about J.P. Morgan Asset Management's recommendations is to buy beaten down shares of travel companies, airlines, and hotels today. I'm looking at some of the airline stocks today. UAL up 1.3%, American Airlines up by 0.5%. Really is a mixed picture, though, because on the minus side, you got Delta and Southwest rounding out the big four. They are heading the other way. Delta down by 0.1%, and Southwest lower by 0.6%.
Yeah, listen, and we have talked a lot on air about equity sector rotation, right? And I think that's going to be kind of our big theme, and that's according to some of the experts in this article, that's what we're going to be going through, especially as we have these stops and starts again when it comes to a vaccine, getting it out to the public, whether we get more aid, and that is certainly going to determine the asset plays here. Fidelity's multi-asset team, they're increasing holdings in regions such as Europe that are badly hit by the virus, betting that they're going to get better. That's kind of a value play. Franklin Templeton contending it's, still too early to move away from places like Asia that have better handled the crisis. So you do have divergent views.
I guess, kind of like roulette. You put the chip on a number of different squares at once and see what happens.
No, there's fundamental analysis. There's strategy.
This is.
This isn't the monkey at the,
with the dart?
The dartboard. But listen, we know this, right? We talk to many people, really smart people, and different strategies, and it's safe to say that different investment strategies will end up ultimately playing out in this kind of crazy time. All right, Charlie Pellet, thank you so much. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell with the Dow, the S&P retreating from yesterday's records. Nasdaq is advancing. S&P paring losses, now trading a little changed after closing at a record. Dow Jones Industrial Average back below 30,000. Tech-heavy Nasdaq edging higher right now. Nasdaq up 68. In fact, pushing higher to a record, up by about 0.6%. Possible record there. S&P down 4, down 0.1%. The Dow lower by 173, down by 0.6%. 10-year yield 0.87%. Gold down 81 cents the ounce, now at 18.06. And West Texas Intermediate crude up 1.8%, 45.72 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed. We're just about a little bit under 12 minutes away from the closing bell, wrapping up at least the first 3 days of trading in this holiday shortened trading week. Of course, we come back on Friday for a shortened day as well. In the meantime, let's check out the trade. Back with us is Sean Cruz, Manager of Trader Strategy at TD Ameritrade. He joins us on the phone in Florida. Sean, nice to have you here. Just looking at some of the notes you shared with us, you say the elevator ride takes a pause this morning, but it's still been an impressive week. It really has been, hasn't it?
It has, and actually what I thought was interesting, I went and looked at some of the volumes we were seeing, and there was actually some pretty decent volumes we were seeing behind these moves, and I think that shows that there actually maybe is a little bit more staying power to some of the gains that we have seen. Because I think that's what everyone's really asking themselves: is this move higher? Is this something that we should expect to be able to maintain, or maybe should I be dialing back exposure just in case things do turn around rather quickly? And they say markets can kind of go up an elevator, but they go down off a cliff. I think that's what everyone's asking themselves. But looking at the volumes, I think this move seems sustainable, at least for the time being.
Why?
I think the big thing is really markets are looking ahead, and I really think the news that Janet Yellen is being considered, or is considered a frontrunner for the nomination for Treasury Secretary, really gives, I think, a lot of optimism to markets, because the assumption also alongside that is that you're not going to see Powell go anywhere. And now you're going to have Janet Yellen, who I think certainly in the past has been a vocal proponent of strong fiscal stimulus from Congress. So we will have Powell, who we got from the minutes today, we know that it is going to remain accommodative, they say, into the future, and they're willing to actually step up and do more on the asset purchase side. And that's something they've all been calling for. And now it looks like you're also going to have a big proponent of accommodative policy on the fiscal side as well.
Well, and when you look at things, listen, when you invest in the market, there are people who play it short term, there are people who play it long term. And I do think about when we get on the other side of COVID, do we hopefully have the policies in place to create a much more sustainable, enduring economy, not one that is just beneficial to Wall Street, but to the broader economy, which ultimately means a more prosperous economy for everyone?
I think so, and I think the thing that I find really interesting with the nomination of Janet Yellen is you've heard Powell talk about wanting to really focus on more inclusiveness, especially in terms of jobs gains. And Janet Yellen certainly echoed that sentiment. And I think people need to keep in mind her background, her bread and butter, so to speak, is really as a labor economist. So she is very, very strong when it comes to labor economics. And as we come out of this recovery, what sort of jobs growth we're getting, does that translate into well-paying jobs with strong wages? And is it going to be more inclusive across the board? I think having a labor economist in the as a Secretary of Treasury. And then you also have Powell, who's also indicated he wants to make sure that's a focus of the Fed moving forward. Sort of gives you a little bit more faith that may actually be the experience of this recovery when we do get to the other side of it.
You know, Sean, we just did a story, Charlie Pellet and I, that basically talked about when, you know, a lot of the global fund managers, they, you know, see an end to the pandemic, but they differ in terms of strategy on how to play it. And there's a lot of discussions about market rotation, right? And depending on the day, we see market rotation, whether it's into some of the value names, whether it's continuation finally with small caps. And then all of a sudden tech comes roaring back and it's like, wait a minute. Okay, so much for market rotation. So I don't know, do you have a strategy, you know, that you are kind of thinking about when it comes to the COVID recovery and what it will be? Or is it something for a few months now and then something else for 2021?
Well, I think the first thing everyone was asking themselves was, are we going to see a true rotation in the sense of you are going to see money flowing out of some of those high-flying tech stocks that have done so well this year, come out of sort of that pile and go into some of the more cyclical or small caps, and a lot more of the just value-oriented plays right now. And I think what we've learned over the past couple of weeks, there was an initial reaction when Pfizer announced their vaccine where you sort of saw that play out on the screen. You saw the Nasdaq actually get hit, but a lot of the cyclical sectors and the indices that really have a strong weighting to some of those more cyclical type names actually did really well. I think markets sort of reassess that, and the sense I'm getting now is, look, we're going to hold on to some of these tech names. We think they really have made some pretty strong progress in user growth, getting people on their platform this year. But we're also seeing some attractive valuations in the cyclical sector. So it really looks like equities are more generally favored. And you're asking yourself, where's the money going to come from? If you just really look at any gauge of sort of sideline cash, and that could be in looking at money markets, look at savings rates in depository institutions, all of those are incredibly high right now. So I think that's where you're going to see the money flow from. It's going to come out of being really truly on the sidelines in MN markets and savings accounts. But I also think some of what you've seen, just the strong demand flowing into Treasury that's pushed yields so low, I think you're actually going to see that also reverse a little bit. And when you start to think of what that means for interest rates and yields, it can favor certain areas like banks. But also there are some interest rate sensitive areas of the economy and the market, thinking housing, automotive, that maybe are going to be on the other side of that coin. But generally across the board, I think it favors equities.
What's the story we need to keep a watch on? What's the thing that could be, you know, kind of turn us upside down again here? Is it rising virus numbers, everything taking just a little bit longer than we anticipate? What is it in your view?
I think it's everything taking a little bit longer than we anticipate. So I'm really focused on what sort of a fiscal cliff households are going to experience if we aren't able to extend some benefits, if banks aren't able to maybe renegotiate some of these loans or some of the debts that are owed out there. You could see a pretty pronounced fiscal cliff coming here towards the end of the year. And I think that's really going to be something that shapes the recovery, is what sort of a platform are we lifting off from? And if we don't get, I think, at least some sort of extension, if not another round of stimulus, we may be coming from a little bit more of a weak point than we would like to be when we do try and fire up the economy again. And that could also really determine the recovery we get. So that's really what I'm watching, the fiscal cliff at the end of the year.
And we know rolling that rock back up the hill is not easy. That's for sure.
Yeah.
Sean, thank you so much. Have a good and safe holiday. Happy Thanksgiving. Sean Cruz, he is Manager of Trader Strategy at TD Ameritrade, joining us on the phone from Chicago on this Wednesday. So just got about 3.5 minutes left in today's trading session. Right now, we're bouncing around a little bit. We're definitely off our highs of the day. S&P just down about 6 points. Dow up, it is down about 175 points, down 0.6%. And the Nasdaq actually eking out a gain of about 0.4%, up by 53. So again, we continue to see the Nasdaq really the outperformer and outlier when it comes to the trade. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange, and it is on to the Thanksgiving dinner table. Folks from Granite Shares ETFs ringing that closing bell, with the Dow, the S&P retreating from records, Nasdaq scoring a record today. The Dow down 173 points, a drop there of just about 0.6%. S&P pulling back by 5, down 0.2%, but Nasdaq up 57 points to 12,094. That was a gain today of 0.5%. The Nasdaq 100 index up 0.6%, a retreat for the Russell 2000, lower today by 0.5%. So what's behind this week's gains for stocks? Indeed, the previous week as well. Sean Cruz is senior market strategist at TD Ameritrade. He was our guest moments ago right here on Bloomberg Business Week.
I think the big thing is really markets are looking ahead, and I really think the news that Janet Yellen is being considered, or is considered a front runner for the nomination for Treasury Secretary, really gives, I think, a lot of optimism to markets, because the assumption also alongside that is that you're not going to see Powell go anywhere. And now you're going to have Janet Yellen, who I think certainly in the past has been a vocal proponent of strong fiscal stimulus from Congress.
10-year yield, 0.87%. Gold, lower, little change, down $1, down less than 0.1%, 18.06 the ounce. West Texas Intermediate crude down 2%, 45.80 a barrel. Slack Technology shares rallied today after a report said it has held talks to be acquired by Salesforce.com, both companies based in San Francisco. The report initially from the Wall Street Journal. We saw shares today of Slack surging 37.6%. Salesforce.com lower by 5.4%. Another San Francisco company making big news today. Gap out with third quarter sales that exceeded estimates. E-commerce jump, but weakness persisted at Gap and Banana Republic. Shares plunged. Gap today down 19.6%. S&P down 0.2. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Shaking all over. Bloomberg Business Week. Movers and shakers.
Shaken, not stirred.
On Bloomberg Radio.
Yes, indeed. Time to take a little bit of a deeper dive into today's trade. I'm Carol Masser right here on Bloomberg Radio, along with Bloomberg News global macro strategist Vince Signorella. Let me just give a little bit more context onto what Charlie Pellet just said. As for the S&P 500, 152 names in the index higher today, 352 lower, 2 unchanged. If I take a look at the major industry groups in the S&P 500 and how they traded today, there are 11 of them. We saw 4 higher, top of the pack consumer discretionary up about 0.6%. Bottom of the pack was energy. Energy's either at the top or at the bottom. That's been the trade today, or really this year, I should say. Energy down about 2.5%. All right, Vince. So what do you make? Nasdaq at another record. The S&P and Dow hit records yesterday. I don't know. I'm not sure how we think about this. I know we talked about it yesterday.
Yeah, I think we are seeing a little bit of the profit taking we talked about yesterday going into the long weekend for most. Not for me, unfortunately, but for most. And I think as we said yesterday, it's pigs get slaughtered. It makes a great deal of sense to take some off the table going into this weekend. It's unlikely next Monday we'll have another sort of virus lift, if you will. I think we've gotten as much as we're going to get out of that for a while.
I do feel like traders have wisened up to it a little bit too, right? That understanding, this is good news, right?
Yeah, actually, I did a quick post the other day about the law of diminishing returns.
Yeah.
The first virus announcement saw a 74-point gap open for the S&P, and the last one was 10. Yeah. So, right now it's kind of become a little Missouri, show me the vaccine and stop telling me about it. And I think that's what we're going to need going forward. But as one trader pointed out to me today, and all the excitement over the Fed, is all the bond buying in the world is not going to reduce food lines. And, if there is no stimulus renewal, if the CARE Act isn't renewed after the day after Christmas, we're looking at a long, ugly winter.
Yeah. Well, which is what President-elect Joe Biden, that's exactly what he said in terms of get ready for a pretty difficult winter. And I don't know, I'm sure you've seen it, Vince. I know I've seen it multiple times, watching some of the evening news shows, and just the pictures of the food lines around the country of people who have nowhere else to go in order to put food on their table.
I was watching on the news last night. I believe it was Dallas, if I recall. And it was it was heartbreaking. I mean, the line just seemed to go on forever and ever and ever. And I know the president-elect gets it. He's talked about wanting to extend the CARES Act, but it looks like from what I'm hearing is that Schumer and Pelosi are still heels dug in, if you will, for the big deal. And if the Senate stays Republican, I just don't see McConnell going for that. So
what's the market chatter on that, Vince? I mean, is there a downside if we do too much aid and overdo it and don't really need it? Because there's certainly a downside if we don't do enough.
Yeah, I don't think the market sees a downside if we do too much. I know people are going to say, look, we're blowing the deficit out of the water. I mean, that's going to happen one way or the other. I think with a Democratic president, Democratic Congress, they're going to want to do aid. Schumer and Warren are talking about forgiving $50,000 worth of student debt for individuals. Now, they don't. I read through the statement. I didn't see an actual plan of how it was going to get paid for. I'm sure there are limits on income that go with that as well. But, at the end of the day, how do you pay for that? Do you raise taxes, or do you tell the banks, you're just eating the bad you're just eating loans? Either way, it's really not good for the economy, and probably isn't really good for the stock market as well. So, go big or go home, or I guess the market's just not going to like it the other way around, I don't think.
Yeah, well, it's interesting too, and we've heard certainly from Jay Powell and the Fed that they're comfortable running. We've certainly heard this about inflation, running it maybe a little bit hot if it means we make sure we don't fall back again. And I do wonder if Congress has gotten the memo on that.
I think they have. I don't think that's. I don't think it's inflation. That's the issue.
It's not. I don't mean it like that, but you know what I mean. Like the idea of kind of overdoing it. I do. I don't.
That's the feeling in the Senate.
Yeah,
that's definitely the feeling in the Senate. They're stuck on the idea that they're bailing out blue states who have run up high pensions and internal deficits. But I think somebody, a trader friend of mine came up with a really good idea. He said, just give X amount of money away to everybody, and then come tax time, if you make over a certain amount, you got to pay it back. And if you get the check and you're going to make over the certain amount, you're not going to spend it because you're going to have to return it. Right. And so at least you get enough money into the hands of people who really need it, and who will, they'll spend it, they'll use it, they need it now. They need it to live. Right. This dancing around who should get it, who should not get it, we're spending too much, too little, is silly when people are on the lines that we just spoke about. I mean, it's inhuman.
Well, and I do wonder too, just to kind of wind up a little bit, Vince, is that you're talking to traders, you're talking to Wall Street, and you and I have talked a lot about the disconnect, and we are again here about between Wall Street and Main Street. Does Wall Street get it? Like, is there some sympathy in terms of what's going on, on Main Street and for many Americans?
Yeah, Wall Street does get it, actually, and I think the dichotomy on Wall Street is actually, I did a post on this today, is the difference between the human traders and the machines. Algos don't get it, and with all due respect to the folks who program algos, they're pretty wealthy quant guys who are compensated, and when you're in that space and you're working and you're getting paid really well, you just don't feel what the average person feels. And I know this from personal experience. The more successful I became as a trader, the less attuned I was to what was really going on the streets of the market. And I had to pull myself back to remind myself where I was from to get back into a really profitable trading situation where I was really feeling the pulse of the economy. The algos don't sense that. They're not programmed that way, and they just react after the fact, and they just don't care. They're models. They just don't care.
Right. They just go based on the math and the models. You've got such a good heart, Vince. Thank you so much. Have a wonderful, wonderful Thanksgiving, and looking forward to talking to you either on Friday or next week. Bloomberg News global macro strategist Vince Signorella joining us on the phone from White Plains. Just a reminder, everyone, how stocks closed on this Wednesday. You did see the Dow Jones Industrial Average off almost 174 points, S&P down about 6, Nasdaq, though, other direction, up about 57 points. And this, as a headline crosses, President Trump pardoning his former national security advisor. We're talking about Michael Flynn. All right, let's get to World of National News. Let's get to Ed Baxter in San Francisco. Hi, Ed.
Hi there. How are you? Yesterday was Turkey, today whom? The tale of the president and president-elect in the last hour. Donald Trump by phone to a handful of Pennsylvania legislators, giving us a look into how he is still dealing with this.
This election has to be turned around because we won Pennsylvania by a lot, and we won all of these swing states by a lot.
Now, he didn't say on what he bases that, and those states have been certified for Biden. The president-elect, with Thanksgiving wishes for all citizens of the U.S., says we are at war with the virus and not each other, to be kind, and urging small gatherings tomorrow.
For those who've lost a loved one, I know that this time of year can be especially difficult. Believe me, I know.
He says that we are all in this together, and the sentiment for small gatherings echoed, well, in a little more animated way by the governor of New York.
I really don't care about your politics, and you don't care about mine. I care about your health. I care about if we're overwhelming our hospital system. I care about how many people die. That's what I care about.
Yeah, Andrew Cuomo, of course. Meanwhile, the formal Biden transition briefings begin on Monday, but Jen Psaki, the transition advisor, says they have already been talking.
We do not feel that it is necessary for President-elect Biden to speak with President Trump in order to get that information. We believe that we've been getting the information that our teams need.
And Anthony Fauci, Dr. Fauci, saying today, confirming that he has also been in touch with the transition teams. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. Carol Masser, along with Charlie Pellett. I want to talk about UPS in just a minute and also Amazon, because there's a lot of stories across the Bloomberg, but I do think we need to rehash, Charlie. President Trump announcing a pardon for his former National Security Advisor, Michael Flynn. You might recall Flynn twice pled guilty to lying to FBI agents examining his ties to Russia, then moved to withdraw his plea. So keep in mind that we may see some more pardons coming our way.
Indeed. Certainly a developing story, one that we're keeping an eye on. And I'd like to switch gears, talk about another story that a lot of people are following, and that is, yes, we've got Black Friday coming up. We've got Cyber Monday coming up. The focus is on delivery. Focus is on getting the products from warehouses to under the Christmas tree. And Amazon merchants around the U.S. say some products that normally reach customers in 1 or 2 days are now taking a week or longer, just as the world's largest online retailer heads into what's expected to be a record-breaking holiday shopping season.
Say what?
Yeah, it may not be here in time, taking longer than people think.
Listen, we've all gotten spoiled, especially if you're a Prime and Amazon Prime. Like, you order it, you get it the next day. Some places you get it the same day. It's like unbelievable. But there have been incredible warnings. I think there's expectations that because of the global pandemic, the health pandemic here in the United States, that people are going to be doing all of their holiday shopping, or a large part of it, online, in addition to just the basic necessities that you increasingly need, especially as those COVID cases go up. And that is going to tax our system once again.
Speaking of which, I don't know if you saw the other story today involving FedEx,
Yeah.
UPS. They can't get enough vans to start moving stuff around.
That's pretty wild. Exactly. And so they say it's resulting in a cost squeeze that's cutting into profit, storing a record surge in package volumes. I am fascinated to see how this all plays out over the holiday season, Charlie, and ultimately what it's going to mean for these companies in terms of, operationally as well as financially.
Stay tuned, as they say, because this is a fascinating story.
All right, and certainly we'll get more as we get closer to Christmas. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, repeating our top story, developing story this afternoon. President Trump says he has pardoned Michael Flynn, his first national security advisor, who has pled guilty to lying to FBI agents about his conversation with the Russian ambassador to the United States. The president making the announcement on Twitter today. The pardon brings to an apparent close a long and bitterly fought criminal case that became a cause célèbre for the president and his conservative allies, who portrayed the prosecution of Flynn as evidence of a broad conspiracy against the president. The Dow, the S&P retreating from records, Nasdaq climbing to a record. Nasdaq up 57 points, now at 12,094, up by 0.5%. S&P down 5, a drop of 0.2%. The Dow down 173, lower by 0.6%. A retreat today for the Russell 2000 index, down 0.5%. Nasdaq 100 index up today by 0.6%. 10-year yield 0.88%. Gold down 0.1%, 18.05 the ounce. West Texas Intermediate crude rallied 2%, 45.81 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, thanks so much, Charlie. So if you had $1 million worth of Slack shares today, or at least at the close of yesterday, they're now worth $1.4 million. So yeah, this story caught our attention. Salesforce apparently interested in buying Slack. Let's talk about this story. Slack shares were up 37% today. Salesforce down about 5.5%. Anurag Rana is senior analyst of software and IT services at Bloomberg on the phone from Chicago. Anurag, nice to have you here. This crossed the Bloomberg earlier today, and we're like, whoa, what's going on here? Was this a bit of a surprise?
It was a bit of a surprise, frankly, because, so far software valuations have been through the roof. So, nobody was expecting a large deal at this point. So, yes, it was a bit of a surprise.
Okay, but it's not a done deal at this point. It's one of those considering buying Slack, according to those in the know. First of all, from a strategy sense, from a financial sense, would it make sense?
It always makes sense from a strategy point of view because, Slack's been losing some market share from Microsoft, and this would give Salesforce an entry into a very lucrative and a very important market. But what it makes, in our view, most sense financially is if Salesforce decides to pay for this thing using stock and not cash. And that's because Salesforce's own valuation has gone up quite a bit over the last 6 months. And, they have very good currency that they can pay with. And that's, I think, if it's done through stock, to us, and I believe to investors also, would make a lot more sense.
All right. So as you say, strategy, it makes sense. Check. Financially, if they do it as a stock deal, it makes sense. What's the likelihood you think that it happens, or could somebody else come in? Is there another person that might be, another company out there that might be interested in Slack right now and is watching this very closely?
It's very tough, largely because, we have to discount all the big players anyway. So that's, none of the big players, that we know about, the largest top 5 companies cannot buy anything without the regulators looking down them with a microscope. The one odd buyer that could come out of the blue could be Zoom, largely because they also have a very strong currency right now, and they could really, partnered with Slack, give a big fight to Microsoft and almost every other legacy product that's out there.
Yeah, let's not forget Zoom, right, which is up 552% this year, is now $126 billion market cap, which is pretty remarkable. All right, so is there a timeline here? I know that Salesforce has their annual Dreamforce conference next week. So could we potentially, if they're going to do something, they're going to get out ahead of this? Or could they use that event to make the announcement? What are you thinking?
It's possible. This is the deal coming out from Thanksgiving Eve was a bit of a odd thing. People, things usually calm down right now.
Yeah.
And the timing, not so much about the next week or, the Dreamforce, but, to us, timing could also be a more factor of that software valuations have started to come down in the recent days because people are now rotating out of the safety stocks and moving more into the economic sensitive stocks that are more, sensitive to a vaccine. So, that could be another reason that, Salesforce could use its currency before, potentially we could see a compression of multiples in the high-flying tech names.
Anurag, you probably saw this right through on the Bloomberg, our own team covering, the expectation or potential, I shouldn't say expectation, but potential of this deal happening. And there's an analyst over at Evercore ISI said that Salesforce shares were down because this was, quote, not the right target, not the right time, and says some strategic rationale. But they say they think investors will view this deal as a reach in order to buy some growth. But isn't that kind of buying things for growth? Isn't that somewhat part of Mark Benioff of Salesforce, part of his strategy? I mean, he's very acquisitive.
I was going to say that. He's been doing that for 10 years. So why are you surprised now? I mean, at the end of the day, you want to see that they want to get into one of the hottest markets in software, that's chat collaboration between. So imagine this. Salesforce sells software to salespeople to be more productive. Imagine along with that, they have this wonderful app that allows you to be productive between salespeople, between their clients. Same thing for customer service. Chat collaboration is the next area of customer service. Yeah. Like it or not, a lot of people, younger people, do not like to call in and try to figure things out. So, if this is the way business is conducted going forward, there are only two players in town. One is Slack, and the other one is Microsoft Teams, really from chat collaboration point of view. Yeah. So if Mark Benioff wants to beat Microsoft, what better way to do it than buying Slack? So I'm not so sure if it's not the timing is always a question, frankly, because of the valuations of the software.
Right.
But Salesforce valuation is itself also up. So it's not as if, there is currency to be played with.
I think that's brilliant too, what you said about chat collaboration. We've certainly seen it just even on the retail, side of selling from not, B2B or anything, but B2C, jewelry stores where they now go online and can have, a face-to-face chat with a, possible customer because those customers can't get to the store, and they talk about that changing certainly the retail environment. But you could see this chat collab happening among businesses, right? That this will be one of those kind of lasting trends of the pandemic. Just got about 20 seconds, Anurag.
No, I completely agree. This is an irreversible trend, and we don't see that changing anytime soon. If anything, Mark Benioff has done deals better than anybody in software. Yeah. So if this happens, I would respect his decision.
All right, have a good Thanksgiving, Anurag Rana of our BI team. For those of you listening in New York and San Francisco, watching on YouTube, Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli. That's next.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week. I'm Carol Masser. It's 4:31 on Wall Street, Thanksgiving Eve, as I've been liking to call it. Coming up, we're going to get the results of a new survey of entrepreneurs specifically, and talking about funding needs specifically and what they've been up to. So we'll get to that in just a moment. First up, though, let's get another check on your top business stories. Here is Charlie Pellet.
Hi, thank you very much. Record for Nasdaq ahead of Thanksgiving here. We've got the S&P Nasdaq retreating from records. The rotation out of tech shares and into cyclicals, sparked by promising vaccine news, reversed today as investors cast a wary eye on the batch of data that suggests a possible slowdown in economic growth. S&P 500 index retreating from that record. The Dow falling back below 30,000. Tech-heavy Nasdaq indexes edging higher. Let's begin with the Nasdaq Composite Index up 57, up 0.5%. Nasdaq 100 Index up 0.6%. S&P down 5, a drop of 0.2%. Really little changed on the S&P after the record. The